revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable
Check.
and early homeownership a reality.
Very good evening, ladies and gentlemen.
IMGC.
We will get started with the proceedings of this evening in another 10 to 15 minutes. So can I request all the delegates, all the guests to please make their way inside the ballroom. We are going to get started with the proceedings of this evening in the next 10 to 15 minutes.
Business Standard. She'll soon be quoted on the front page. Business Standard.
IMGC. India's first mortgage guarantee company. Revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. Journey so far. With the vision of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable and early homeownership a reality. IMGC. Defining tomorrow.
He's making his investments talk. Business Standard. She has ambitions of becoming a brand. Business Standard. She'll soon be quoted on the front page. Business Standard.
IMGC. India's first mortgage guarantee company. Revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. Journey so far. With the vision of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable and early homeownership a reality. IMGC. Defining tomorrow.
He's making his investments talk. Business Standard. She has ambitions of becoming a brand. Business Standard. She'll soon be quoted on the front page. Business Standard.
IMGC. India's first mortgage guarantee company. Revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. Journey Sofa. With the vision of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable and early homeownership a reality. IMGC. Defining tomorrow.
He's making his investments talk. Business Standard. She has ambitions of becoming a brand. Business Standard. She'll soon be quoted on the front page. Business Standard.
IMGC. India's first mortgage guarantee company. Revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. Journey Sofa. With the vision of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable and early homeownership a reality. IMGC. Defining tomorrow.
He's making his investments talk. Business Standard. She has ambitions of becoming a brand. Business Standard. She'll soon be quoted on the front page. Business Standard.
IMGC. India's first mortgage guarantee company. Revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. Journey Sofa. With the vision of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable and early homeownership a reality. IMGC. Defining tomorrow.
He's making his investments talk. Business Standard. She has ambitions of becoming a brand. Business Standard. She'll soon be quoted on the front page. Business Standard.
IMGC. India's first mortgage guarantee company. Revolutionizing the housing ecosystem through early homeownership, enhanced
All right, a very good evening, ladies and gentlemen. As stated to all of you before, we are going to get started with the entire proceedings and schedule of this evening.
Revolutionizing the housing ecosystem through early homeownership, enhanced home loan eligibility, and credit risk mitigation for lending institutions. An ever-growing presence and business footprint. Journey so far. With the vision of facilitating early home ownership and making housing affordable, our identity is defined by trust and partnership, integrity and transparency, inclusive enabler, pioneering. Backed by the marquee investors. Partnered with over 20 lending institutions, including banks, HFCs, and NBFCs, making housing affordable and early homeownership a reality. IMGC. Defining tomorrow.
All right, very good evening, ladies and gentlemen. Good evening, everyone. Wow, it seems like the entire session is attended by like 3 people, so we'll do it again. 3, 2, 1. A very good evening, one and all. That sounds more like it. Good evening, everyone. I'm Ridhima. I'm going to be your host and moderator for this evening. And together, ladies and gentlemen, we are going to be embarking on a journey through the dynamic landscape of housing finance, exploring the latest trends, innovation, challenges which shapes our industry. Before we begin, can I request all of you to kindly get settled down so that when we start with our strings of panel discussions, fireside chats, we have a complete audience in attention. Ladies and gentlemen, welcome to the 3rd edition of India Mortgage Leadership Conclave 2024, brought to you by India Mortgage Guarantee Corporation and Business Standard. IMGC, ladies and gentlemen, is India's first and only mortgage guarantee company formed to facilitate early home ownership and enable financial inclusion. The global economy remains uncertain with slow growth rates and high inflationary trends. And amidst all of this, India shines like a bright spot amidst these turbulent waters. Our country has managed to retain its title of being the fastest economy in the world. And we're all gathered here today in the presence of distinguished luminaries and pioneers of the Indian housing finance industry to actually understand their perspectives, insights, and point of view on the current scenarios. These leaders, ladies and gentlemen, have made massive contributions in spearheading the mission of providing housing to every Indian and actually paved the way for fostering multi-dimensional growth. In India, as you all are aware, the dream of owning a house is deeply ingrained in the cultural fabric and aspiration of its people. It symbolizes a sense of stability, security, and a cherished sense of belonging. For many, it actually represents years of hard work, sacrifice, determination, and actually a testament to the resilience and spirit of our people collectively. Amongst all this backdrop, ladies and gentlemen, the contributions of our esteemed stalwarts have nothing been short of transformative. By pioneering innovative financial solutions and fostering affordable housing initiatives, they not only facilitated access to housing finance, but actually have also empowered individuals and families to realize their cherished dream of home ownership. Their leadership extends far beyond the realm and confines of boardroom to actually resonating in the lives of people they serve. Through their unwavering focus, they have laid the foundation for a more stronger, vibrant community. Their collective endeavors, ladies and gentlemen, have actually touched the lives of millions of people, igniting hope and opening doors to a brighter, bigger, bolder future. As we gather here today, let us celebrate their remarkable achievements and reaffirm a collective commitment to building a more inclusive and prosperous India. On this note, from the bottom of my heart, I thank you all for your extraordinary support and unflinching dedication to the betterment of the nation called India. At this juncture, I would request to start our exciting and insightful journey and witness the knowledge and expertise that will be shared and disseminated by some of the brightest minds of India. At this juncture, I would like to invite Mr. Shailesh Dobhal, Editor, Business Standard, to render the welcome remarks and get started with this stage.
Thank you, Ridhima. And good evening, ladies and gentlemen. Welcome to the Business Standard IMGC India Mortgage Leadership Conclave, the evolving ecosystem of housing. The context in which we are holding this event is very interesting. Finance Minister Nirmala Sitharaman presented the interim budget last week. She stuck to convention. The interim budget did not announce any tax changes or any new schemes. But for the housing sector, there were two very important takeaways from this interim budget. First, the targets under the existing rural housing scheme, that is the Pradhan Mantri Awas Yojana Grameen, was revised to add 20 million new houses on top of the 30 million that has already been delivered or would be delivered by the end of this financial year, March 2024. Allocations under the scheme, which is the Pradhan Mantri Awas Yojana, went up to 54,000 crore from 32,000 crore that is actually spent in FY24. Additionally, the government also announced that it will be coming out with a new scheme for deserving sections of the middle class, urban middle class, who are currently living in rented houses, slums, chawls, and unauthorized colony to build and buy their own homes. Together with this announcement, and if you look at the broader trend of urbanization in India, which is almost an irreversible trend, the last census that we had was 2011. We do not have the benefit of the 2021 census, which is delayed because of the COVID. But projections on the 2021 census tells us that almost 36 to 40% of India's population is now urban. And it goes without saying that urbanization, economic growth, and housing are closely interlinked. There are strong multipliers of real estate where housing is an integral part across the economy, and that cannot be overemphasized. There are various studies, if you look at it, which give you the linkages between construction and the multiplier in the economy. And one study, I think it's the Ahmedabad study, which says there's a 5x multiplier of income and 8x multiplier of employment across the economy from construction. If you look at the bank results of late, home loans have, as a proportion of retail advances, have gone down a little bit, 2 percentage points. They're still at 47%. But if you look at the whole mortgage market in India, as percentage of GDP, that would be roughly 11 to 12%, and compares very poorly with even developing market like Singapore, Thailand, where I'm told it's upwards of 30%, and not to speak about developed markets like US, the Western Europe, where it's 60%, 70%, even 90% in some markets. So it's obvious that the growth potential of mortgage finance is immense. As Mr. Parekh said in one of the conferences last week, the runway is very large for mortgage finance. The rush to get into mortgage finance equally has been very active of late, and 2 or 3 of the country's biggest banks and insurers in the last month have announced their entry into it. One with the NHB, and then the biggest bank in HDFC, ICICI, and LIC. So in this context, to discuss and debate the road ahead of the evolving ecosystem of housing, we have lined a very stellar panels for you this evening. And to top it all, we'll have the honor of having Mr. Dinesh Khara, Chairman of State Bank of India, and later in the evening, Mr. Deepak Parekh, Board Member of HDFC Life and HDFC AMC, amongst us, to enlighten the audience here and thousands who are watching this program live on Business Standard website on the experience, perspective, and prognosis on mortgage finance. Well, with such firepower waiting to be deployed, I think it will be criminal for me to hog the limelight here. So let the show begin. Over to you, Ridhima. Thank you very much.
Thank you so much, Mr. Dobal, for those candid thoughts. At this point, ladies and gentlemen, I would like to invite on stage Mr. Mahesh Misra, Managing Director and CEO of IMGC. Born out of a vision for facilitating early home ownership and making housing affordable, IMGC's primary objective is risk mitigation for lending institutions by providing a backstop against credit failures and credit defaults. Having partnered with over 20 lending institutions, including banks, housing finance companies, and non-banking finance companies, they have issued guarantees of a whopping 24,000 crores and helped over 1 lakh families realize their dream of owning a home. And I think it would make a lot of sense for Mr. Misra to deliver the opening remarks. So can I request Mr. Misra to make his way on stage?
As Shailesh mentioned, it is a crime to hold you for too long, so I won't be very long. Firstly, good evening everyone, and on behalf of Business Standard and IMGC, I welcome all of you to the third edition of the India Mortgage Leadership Conclave. We last had this in 2019. For a variety of reasons, including COVID, we could not have this for a few years in between. And I was just reflecting on all that has happened between 2019 and now. I mean, firstly, we as a nation are the world's 5th largest economy, slated to be the 3rd largest in 3-4 years' time, seen to be a one bright spot in terms of GDP growth projected north of 6%. The world has its eyes on us, and as most of us know, housing and housing finance have a major role to play in driving this growth. When I also look at our industry, I mean, the housing finance portfolio has grown from 22 lakh crores to a whopping 33 lakh crores between 2019 and now. When I look at annual housing finance originations, they have moved from about 6 lakhs in 2019 when we last had this conclave to nearly 9 lakh crores today. I will obviously not use this platform to plug a little bit about ourselves. In 2019, we had guaranteed just about 3,000 crores. We have grown 8 times since then and guaranteed about 24,000 crores. We have also seen between then and now, interest rates move from 8.5% back then down to 6%, and now again inching back in the 8.5% to 9% range. We saw delinquencies increase a little bit and then flatten, and now they are kind of somewhat stabilizing. The housing finance industry, which had never heard terms like moratorium or restructuring, those terms entered our lexicon. And keeping in mind all that we have seen in the last 4 or 5 years, we have chosen 2 themes for our panels. One is on the need to build resilience, given that we've all seen multiple cycles. And the second really is the growth driver, which is affordable housing, where I would argue that the action has not yet matched the noise, and so therefore I think the need is to debate what really is affordable. So with this, I'd like
to get you up close and personal with a leader with an unassuming personality and humility, but armed with bold ambition. His effectiveness as a leader can be gauged from the simple fact that under his leadership, the profitability of State Bank of India accelerated at a historic high, closing at rupees 50,000 crore in FY23. And he has a track record of ensuring impeccable assets with NPA below 1%. It's my pleasure to welcome our prolific speaker, Mr. Dinesh Khara, Chairman SBI, to address the audience through an engaging fireside chat, which will be moderated by none other than the consulting editor at Business Standard, Mr. Tamal Bandyopadhyay. So if you could have you on stage. So the fire.
Kharasab, why don't you have a little, because keynote, few minutes you address us and then we'll have a conversation.
Right,
thank you. Thank you.
Thank you very much. Very good evening to all of you. I'm very pleased to be here in this gathering. And the subject matter is something which is very dear to me, rapid transforming of Indian mortgage market. I trust the key takeaways from our collective and collaborative approach on the forum like this should go a long way in shaping the contours of the real estate that has the capability to fire the giant wheel of this Indian economy. I'll keep the address short as we have the panel discussion or the fireside chat lined up also. Our resilient economy has upended the prospects for realty sector as one of its key growth driver. The real estate sector is poised for exciting times, riding the synchronized policy actions, regulatory reforms, easier terms of long-term financing from financial intermediaries, and formalization of economy gaining credence. With the latest narrative and the numbers to housing enablers given in the budget, there is a Goldilocks movement for the sector in the offing. Financing remains the most critical key to enable households owning the developing units in sync with their aspirations. The ability of the banking system to deepen and proliferate the markets by attracting buyers to avail long-term finance conveniently has seen India's real estate financing by formal players increasing manifold. As per RBI FSR, over the last 11 years, the share of residential housing loans in total advances of the banking system has increased to 14% from around 8% in March 2012. Apart from the direct lending, the banks have been spearheading the housing for all movement by tying up with the co-lending institutions, namely HFCs and NBFCs, who have the last mile connectivity. This is important since HFCs can often operate in select pockets where formal players are still not able to make inroads. Banks are also geared up towards raising loans in terms of long-term bonds to finance the affordable housing, making investors a part of our sustainability commitments. The government's focus on increasing spend on housing and infrastructure is expected to have a far-reaching multiplier effect on the economy. Increased investment in housing and infrastructure sector will have a positive domino effect by directly bringing growth to all the allied industries and increase the employment opportunities. Housing construction activities have stronger linkages with their upstream and their downstream components. This means that upstream suppliers along with the value chain tend to benefit more than the downstream sectors in case of housing. In contrast, the real estate services have stronger linkage with the downstream component than the industries found upstream. Additional livelihoods are generated from the activities of these two related sectors. For a geographically and culturally diversified country like ours, with a large population base and economy still transforming to formalization, there are multiple pain points in adopting any particular model in toto as we chase solutions to providing housing for all. The intent of the policymakers to accelerate the ease of living that envisage an ownership dwelling unit for each household through faster and adequate credit delivery, interest subsidy and tax incentives, and strengthening laws that deter certain elements from gaming the system while using digitization to enable better land ownership records would rather work a long way. The impact of real estate on multiple industries like cement, steel, furnishing and finishing is well known. Also, construction has a lion's share in creation generation of jobs across multiple places. Fortunately, with policymakers' genuine effort, the entire ecosystem is geared towards accomplishing this goal with efficiency, tying along multiple milestones and fulcrums. The cost of enhancing the cost of financing has considerably been brought down for the most deserving group through subsidized interest rates by GOI. Also, banks like us are very conscious of pegging the interest rates to optimally lower loans for home ownership. We also incentivize borrowers with good credit history with low rates or give concessions to women borrowers to encourage them to come up in the life and also contribute meaningfully for the society. GST has been instrumental in simplifying the tax structure and ensuring an efficient tax collection regime as indicated by the recent monthly data, thus plugging the loopholes and giving the policymakers a unified, holistic view. The next driver of growth should come from the non-conventional areas, Tier 3 and beyond, towns and centers, as also rural pockets that has got the proximity to the urban agglomeration. And also, thanks to the improved connectivity, this will become a reality soon. As policies are framed to cull the friction points on land ownership through digital routes or better utilization of government land for affordable housing clusters, there are clear echoes of a great transition in the offing. So these are some of my thoughts I felt I must share with this larger group. Thank you very much for giving an opportunity. Thank you.
So we'll have a little freewheeling chat on the market. Ridhima actually took away whatever I wanted to say. I mean, Mr. Khara has seen the highest ever net profit posted by India's largest bank, which is about 20% of the industry, and the only bank which is among the top 50 banks in the world. And also, as she has said, the other part, NPA or the bad assets is less than 1%. So congratulations, Khara Sahab. But what she did not say is this, Mr. Khara is the second chairman in SBI's 200 plus year history who got beyond the first term. Arundhati was the first lady, got 1 year, and you got about 8 months, 9 months. Right? And because that's the particular age that you would reach in August, that's why. Otherwise, you could have been probably longer. So, welcome to this, Khara Sahab. We'll have a very freewheeling conversation. Incidentally, I was your customer, home loan customer. 2016, I took that loan. And I remember it took me at least 1 month to get that loan. But now, and that was the time when India's largest private bank was talking about within 48 hours, within 72 hours, within 5 days, given there. Your DMD is sitting here, he was with that bank, I think at around that time. But now I understand SBI is as nimble-footed as some of the private sector peers. Your processing time has dramatically improved. Can you take us through? Because is there more processing units or what's happening internally SBI?
Thank you very much for the opportunity, Tamala. What you mentioned in terms of processing time, of course, we have also traversed a journey. Way back, we started housing loan in our portfolio in a meaningful manner from the year 2000. Before that, we used to do, but not as significantly. But after 2000, what we have done, we have actually gone through the journey. When we started, of course, our branches used to be the places where we used to sanction the loans. But for all purposes, from the year 2011 onwards, we have actually significantly improved our processes in terms of the centralization of the processing. Initially, we used to have about 150 odd centers from where we used to process the housing loan for almost about 20,000 plus branches. So today we have come to a situation where we have now got almost 400 centers spread across the country, and from where we are doing the housing loan sanctions. And also it's a centralization in terms of the sanctioning, disbursement, documentation, disbursement. So everything is now centralized across the country. And also when it comes to number of days, what you mentioned, today we have come to a stage where our average time taken for sanctioning of home loan is 8 days, and it is average time taken because average time has to keep in mind the kind of processes which are required to be done in terms of verifying the documents, title deeds, etc., etc., and obtaining opinion reports on those title deeds. So all said and done, this is the kind of a number which we have achieved. Also, I would like to mention that almost about more than 50,000 odd applications are processed every month in these centers. So that is a kind of a volume which we handle. So actually the number is somewhere around 57,000 and odd, which we are processing on a monthly basis. So I think there's always an effort to improve. And when we started, we had some loan management system. We have significantly upgraded that loan management system now. And it actually helps us in reducing the processing time significantly. And we are quite cognizant of the fact that if at all we have to really build up this book, we have to be very mindful in terms of the time taken for delivery on ground. So that is something which we are working on.
I think precisely 391 centers, right? I was going through your
that's right.
annual report, 391. And you plan to add another 150 soon by this year.
Yeah, last year we added about 150 more centers.
And by the time you step down, how many more you would like to add?
Well, we are assessing the requirement. Depending upon the requirement, we are quite open to add many more centers. And it's actually now we have come to a stage where wherever possible, if at all digital documentation is possible, even that is also being facilitated. And I would say that in terms of maintaining files and because these are the long-term loans. They are normally 20 years lifetime loan, and on an average, of course, we have seen that average duration of these loans in our book is also somewhere around 7 to 10 years, depending upon the areas. So, but yes, of course, this is one area which we have to be very clearly focused, because these are the title deeds which are kept with us, and we should be in a position to pass on the title deed as and when the loan is repaid. So these are some of the operational issues which we have to be very cognizant, and we are ensuring that we should be on the top of it always.
I should have initially said, I forgot, that SBI's home loan portfolio is, correct me if I'm wrong, a little over 7 trillion now,
Yeah, that's
and which is 20% of your overall assets, that is 35 trillion.
Yeah, you're right.
Right? 35 lakh crore is the overall assets, which is comprising retail assets and mid-corporate and agri loan, home loan, etc. And of that, 20% is home loan, which is 7 trillion plus.
That's right.
Right? And overall, probably the banking sectors, because overall home loan market is about 30 trillion, that's the number I
that's
see.
right. That's right.
As of
About 14% of the total loan book which is there of the banking system, it would be somewhere around that only.
Yeah. So, and banking sector contributes the maximum of it and all. So, Mr. Khara, tell us this processing, beyond processing, and how much you give. These are all micro stories, but at the macro level, this construction, I mean, housing thing is something which can really create employment and give a big fillip to the economy. Right, like say roads and bridges, like the construction companies, because you have labor, you have cement, iron, and everything else for this housing company. For employment generation, for taking the country to, and banking, particularly State Bank of India of your size, you are a proxy for Indian economy and all. So how do we actually approach this? I mean, what are the ways? Like one way could be what happened in Singapore, the Lee Kuan Yew experiment, where the primarily how do we bring down the cost for financing for the, because by the Reserve Bank of India's norm, you are not allowed to give loans to the developers for buying land, right? That's a separate story. But in the retail segment, on the demand side, you can do whatever you want. But how should the country approach this? Because the subject is housing for all, and how do we add to the resilience of the Indian mortgage market. It's globally, it's a very loan to GDP ratio, loan to mortgage ratio in India is the lowest, 11%, right? This is the market, and this is the segment which can really play in a very, very, very positive role to our ambition of growing economy to 5 trillion, becoming third largest economy. So what other things need to be done?
Well, of course, I think the formalization of economy is something which has really helped this sector to grow. The kind of challenges which normally a financer face is essentially relating to the digitization of the title records. Many of the states have done it, but some have yet to do it. So that is something which is the first and the foremost. Then of course there is always an effort on the part of any lender to look at the EMI, NMI ratios so that the borrower should not be over leveraged. What we have seen is that in the formal sector there is perhaps not much of challenges, but in the informal sector there are challenges, and that is one of the reasons why perhaps the housing finance companies are in a position to take a call in terms of the imperfect documents or inadequacy of the title deed, or maybe availability of the very clear record in terms of the land and title deed. So I think that is one of the major challenge which we face. And of course, I would say the RERA has of course brought in a lot of discipline in this particular sector, and that has established the credibility of this sector in terms of its ability to really deal with this kind of a situation. So I think I would say that if at all this whole process in terms of the mortgage, etc., can be streamlined, it will go a long way. And what we have seen is invariably the imperfection of paperwork is something which is a cause why the banks are not in a position to come all the way, and there perhaps the NBFCs and HFCs step in and they take a calculated call in terms of lending to such sector. But yes, of course, when it comes to housing for all and the government initiative in terms of PMAY went a long way in terms of making it a reality for many. So I think this is something which works very well. The other model which of course we have seen is in Singapore, where almost about 80% of the land ownership is with the government, and they can decide in terms of where what should come up, and that gives a very clear visibility in terms of the title deeds. The second aspect is that they are using something comparable to our EPFO for extending loans. Of course, that is a funding channel. It is those loans are extended by entities like HDB, which is more as a sovereign fund owned entity. So that is something which is working out there. So I think, of course, there are some lessons to learn from them, but of course we will have to probably create a solution which is typical for the Indian situation.
As you rightly mentioned, that RERA has brought in a lot of transparency as far as the developers, the way their activities are concerned. But do you, see, of course, the budget already happened, that's an interim budget, we'll see the full-fledged budget post the elections, etc. But is there any scope for fiscal incentives, tax incentive, etc., to pump up the sector?
I think much of it will depend upon how the GOI will look at it at the time of the final budget. But yes, of course, I certainly feel that there could be a scope for giving some incentive so that homeowners are also encouraged. Because the other piece is that though HRA or the rent is deductible in terms of the tax, but as far as the home loan installments are interest on the home loan is concerned, that has probably, it can be revisited, though of course it is allowable as an incentive. But yes, of course, over the period of time when it was last looked into, maybe there could be a scope for revisiting this aspect.
Sir, can you give us some sense, like 7 trillion plus that your home loan portfolio, is it predominantly retail, or is there any segment which is also LAP there, or the developers?
We hardly have any LAP for individual and LAP for corporate all put together would not be more than 2-3% in all. So it is all pure play mortgage loans or maybe housing loans. And for the retail sector.
Okay. Not the developer financing,
no,
right?
No.
Yeah. We will have panel discussions on that bit, but just a little bit, because as BA chairman we don't get every day to talk. So tell us a little more about which is playing a very critical role in mortgage market also in terms of risk assessment and underwriting and all. But overall, being the country's largest bank, people say that now the elephant is dancing. Is it to the tune of AI and analytics?
Yeah, of course, we have started leveraging the database which we have. It was quite a static database for many, many years. But now we have created various algorithms, and we are running those algorithms on our database, which actually helps us in honing our risk management practices. Apart from that, it also helps us in terms of identifying the potential customers whom we should reach out for offering our various products and services. And on the top of it, it also helps us in offering the customer what they are looking for. So that is something which we have started doing. And happy to share that today, with the help of analytics only and through our YONO platform, we are underwriting more than 1 trillion worth of assets, which is quite, in fact, if we look at our total balance sheet, it is a very small number, but nevertheless, I would say that in about a year or two, we have been in a position to make it so powerful. And going forward, we are expecting, in fact, there is a growth of almost about 30% in a year in this particular loan book which we have created. And in terms of quality also, this loan book is much, much better than already much better quality which we have. So this is something which we are doing. Analytics is actually one of the major levers for us in terms of marketing, risk management, in terms of identifying the markets where we should go, and also for improving the customer experience.
So you are running a sort of digital bank at some level.
Yeah,
you know is already there.
I would say that it's a beginning. We would like to scale it up, and the ambition is to take the YONO to the next level, where it will be a digital bank within the bank.
Khara Sahab, it's a sort of extension to the mortgage market, I would say. PM recently announced that about 1 crore solar rooftop.
Yes.
Right? 10 million solar rooftop. So can you tell us like how SBI or the entire banking system would approach this to help?
No, we actually look at it as an opportunity. We already had introduced various products for promoting adoption of solar, and rooftop solar is one such program which we were already running. And I believe that it can go a long way. When I looked into the broad contours of the scheme, I could observe that this is actually going to be a game changer, because every household will become the electricity producer by virtue of this, because they will consume part of the electricity generated through solar, and the remaining they will pump into the grid. So that to that extent it can go a long way in addressing the energy security needs of this economy. And my sense is that, say normally these assets are for about 20 years, and if at all it takes care of the EMIs are not more than say 8 to 10 years of their electricity bill. They are actually having free electricity, and also at the same time they are generating income for themselves. This is going to be a big game changer. 1 crore solar rooftop, I'm sure. We have already seen the adoption of this in a big way in 2 states. One is in Gujarat, the other one is in Kerala, where this has been adopted. And what we have seen is that a very well integrated approach with the state government, various functionaries, and also the DISCOMs has actually made it happen. So I'm quite hopeful, and I perceive that it's a very promising scheme, and we as bankers would be very happy to look at it in whatever way we can contribute for making it a success.
Mr. Khara, coming back to the mortgage market, now if you see, as we discussed in the initial stage, that it's a 30 trillion odd market, you are 7 trillion plus. HDFC Bank, because by virtue of the merger of HDFC with the bank, is 7.5 trillion. So between you two is about half of the 50% of the market. And then the other banks put together probably 80% of the market. Rough, I'm just saying. It probably 78 to 81%. I don't have the current figure, but till July, at least till the till the first half of the last calendar year, that was the kind of scenario. And if we see that segment which banks catered to is very different from the segment of NBFCs, because the cost of fund is very different. No? Your cost of fund could be, you are probably the lowest cost of fund in the industry, less than 5%?
More or less, yeah.
4.5% or
Yeah,
4.75%.
That's it.
Huh?
That's right.
So conduce, sir. Don't give any money to the depositors.
No, it's not like that. It's not like that. I must also mention that, the well-being of the economy depends upon the low interest rate structure. And at the same time, we are not compromising the depositors'
Now,
interest.
we'll come to that, sir, later.
Yeah.
But I'm just saying that by virtue of that, I mean, investors will love it, and so are the home buyers, because you can give home loan at a much lower rate. But your target audience is different, the salaried class, etc., etc. And NBFCs need to have those target. I mean, those are, I would say, on the risk parameter will be slightly risky, and they would charge the higher rates because they don't have the advantage of CASA, what the savings bank and the current accounts which the banking system has. So, is this the architecture for Indian mortgage market? Will it continue, or do you think some kind of disruption, it can be approached in a different way?
No, I think, as I mentioned, that if at all there is the increasing credibility of the land records and also the certainty of the income streams, will certainly boost the confidence. And invariably nowadays we are also evaluating the credit scores of the borrowers, because that is something which captures the unstructured piece very well. So we are evaluating, not that we are only confining to the salaried class. We are looking at some threshold level when it comes to the credit scores. And if at all the borrower has got those credit scores, we are extending them the interest rate benefit also. And also we are very happy lending to such customers.
And the banks poaching each other, that trend is not anymore there, right?
I think that will remain a reality. That we all have to accept.
Okay. Post Lehman crisis, I think SBI got into this teaser loan, where the first 2 years it will be a very low rate and then go up and all. So you keep on experimenting, innovating. Is there any kind of innovation we can expect from SBI in the mortgage market?
No, those are the early days when we started getting into the mortgage market. That was a point of time when it was felt that in 10 years' time, all these borrowers will have a higher income and their ability to repay will be much higher. So as against that, what we have observed is that nowadays, on and average, the average duration of such loan book is just about 8 years or so. So I think we are encouraging people to go for the second home loan. We are encouraging people to go for the upgradation of their homes. So we are extending credit facilities to all such kind of things also. So these are the add-ons which we keep on offering, and we keep on looking at what the customers are looking for and accordingly try to offer them the solutions.
Thank you. So it's a banker for every Indian. Sir, just out of mortgage, I'll have just 2 questions to you.
Sure,
we are
please.
almost coming to an end. I'll not take much of your time. Thank you for coming and joining. About this liquidity tightness that everybody is talking about. And NIM is coming under pressure. That's the net interest margin between what a bank earns on the deposits and what the bank spends, or the spends on the deposits and earns from the loan assets. So NIM is coming under pressure. CASA is going down. Credit to deposit ratio is going up. For many of the banks, it's 100% plus. Reserve Bank of India has been talking about it and all. So what's happening? Is this how far is it very critical? Is it something that you have never seen in your career? Some of the bankers says, no, we have not seen this kind of pressure on deposits. What's the way forward? The credit growth will come down?
Well, of course, I think this invariably we see around the time when there is a advanced tax payments are due. That's a point of time when invariably the liquidity gets squeezed from the system. That is one part of it, the story. Overall, there is a liquidity deficit in the system which is around 3 trillion or so. But we have seen that RBI is very closely monitoring that deficit and are ensuring that there is a VRR facility is made available so that the growth should not get impaired. So I think it's a fine balancing which even RBI is doing. So at the same time, as far as the fiscal is concerned, it is much within control. So I think the as far as the rates are concerned, the GSEC, etc., that will continue to be quite soft. So I think this is the new paradigm which we are moving into. As we are moving into the developed market, the financial markets becomes more and more efficient. And that is what it will probably operate at very thin liquidity levels also.
So nothing to be worried about. The banking
I don't
system's
think so.
good run will continue
No, see
in
the
terms
point.
of quality of assets as well as the credit growth.
I think as far as quality of assets are concerned, all banks are quite cognizant, and they have put in place enough mechanisms on ground to have better underwriting and also to ensure that the quality is maintained in terms of the recovery efforts. So I think I don't perceive much of a challenge in terms of quality for the banking system.
And credit growth?
Credit growth, I am quite hopeful that I normally believe that it is linked with the macro, and macro is poised very well in terms of the growth opportunities. So with that, the credit growth should continue to do well.
Your deposit growth is good enough to support credit?
Yeah, very much. We have last quarter also we have grown. The gap between the two is just about 1%, but the fact remains that on the deposit side we are at about 47 trillion, on the loan side at about 36 trillion. So we are having a sufficient, there is no challenge, and on the top of it we still have excess liquidity in terms of SLR to the tune of about 3 trillion in the system. So we are very well placed in terms of...
And your credit deposit ratio, sir?
Credit deposit ratio as on December was 66%.
66%.
Yes.
Oh, there's
and
a lot of
also
scope then.
we have got a liquidity coverage ratio of more than 130%.
Oh,
so we are very well placed in terms of supporting the growth initiatives of the economy. So
66% credit deposit ratio, and you have plenty of excess SLR, government bond.
Absolutely.
So no halt to the growth of State Bank of India.
No challenge for the growth.
Okay, sir. It's a great note to end, but before that, since you said that Reserve Bank of India, it was not actually, I did not think on those lines, but you said you brought in, don't blame me, RBI is doing a very fine job in terms of liquidity management. As we speak, the MPC meeting is on. MPC, those who are overseas, have come from overseas. MPC is the equivalent of FOMC in US and MPC in UK. So MPC meeting is on, and tomorrow we'll get to know what Reserve Bank of India's verdict on, or the MPC what it decides on with the rate, whether it's hike or change or whatever it is. So what is your take, sir? Very brief, whatever you can say.
I think MPC is very clearly focused in terms of ensuring that the inflation rate should be within 4%. So as of now, it is around little more than 5. So my expectation is that it should be a status quo as far as the policy announcements are concerned tomorrow.
No change in rate.
Change.
And no change in stance also?
I expect likewise.
Okay. So that's from Mr. Khara, who leads State Bank of India, country's largest lender, 20% of the industry, and one of the top 50 banks in the world. So Khara Sahab, thank you for your time, your talk on mortgage and beyond.
Thank you. Thank you very much.
Thank you so much, Mr. Khara and Mr. Bandyopadhyay. At this juncture, can I request Mr. Mahesh Misra, MD and CEO at IMGC, to present Mr. Khara with a token of appreciation. Ladies and gentlemen, can we give a huge round of applause for this fireside chat, from liquidity tightness to credit deposit ratio, to the fact that SBI is a digital bank, and to the ambition that every home is going to be an electricity generator. I think this was a very vivid and versatile conversation that we witnessed. Thank you, Mr. Tamal Bandyopadhyay and Mr. Khara for this very engaging and reflective conversation. Moving on, ladies and gentlemen, we are going to be witnessing in a few moments from now a very engaging and splendid panel discussion, which actually explores the theme of building a resilient housing finance ecosystem. Actually, this entire process involves creating a framework that ensures stability, accessibility, and sustainability in the housing finance markets. And here are some of the components for the same, which entails components like regulatory framework, market transparency, risk mitigation, affordability initiatives, financial inclusion, public-private partnerships, technology and innovation. Ladies and gentlemen, throughout history, the endurance of societies has been deeply intertwined with the stability and accessibility of housing. Today, we actually navigate the complexity of rapidly changing world, the resilience of our mortgage structure, which serves as a key component for societal progress and stability. As we actually confront unprecedented challenges such as economic volatility, environmental sustainability, and demographic transitions, it is imperative to fortify our housing finance ecosystem, and it is relevant more than ever. To further actually elucidate, deliberate, and propound on this topic, which is building a resilient housing finance ecosystem, we would like to call on stage our distinguished set of luminaries and panel members, beginning with Mr. Shobhit Agarwal, MD and CEO at Anarock Property Consultants. And we also have with us Mr. Vipul Rungta, MD and CEO, HDFC Capital Advisor, Mr. Stuart Teague, Board Member, IMGC Global Mortgage Business Leader, Mr. Sandeep Menon, MD and CEO at Vastu Housing Finance, and Mr. Abhinandan Lodha, Chairman Lodha Ventures. Our esteemed panelists represent a diverse spectrum of expertise, exposure, experiences, and today it's going to converge to delve into the intricate layers of mortgage streamlining. At this juncture, I would also invite our moderator, Mr. Tamal Bandyopadhyay, to please make his way on the stage to navigate and maneuver this panel discussion. All right, I think we're all set. Let's get started.
Thank you, and sorry you have to suffer me for another session, so bear with me. This is if you have seen that, it's a very, very interesting panel, not the lender alone. Is there, he is a sort of, I would not take much of the time, but you say that. Hello?
It's working.
So you have seen that it's a very, very interesting combination. We have consulting firm who, like that extreme right, the gentleman is there, who keeps a very close tab what's happening in the housing sector, micro, region specific, macro, trend, everything. We have Sandeep Menon, who runs a company which has gone through, like, I have Sandeep, if I'm not mistaken, I think 2016 you started, and one after another, right from demonetization to GST to COVID, everything you had seen, but you're doing remarkably well. Probably what's the key to this, we would like to know. We have others. We have one person again, from AIF, if I'm not mistaken, that alternate investment fund, very different from the normal lenders. So we will hear from you. What's the Rungta from original HDFC? We'll hear from that. We have Mr. Stuart Teague. Thank you, board member IMGC. And finally, we have Abhinandan Lodha from the community of builders. So we will have a 360-degree view of what's happening in the industry. Building a resilient housing finance ecosystem. That's the subject. And I will take a very, very 2 or 3 data points just to kickstart. What are they? So just first one, as I already said, that outstanding housing loan portfolio as in June 2023 is 30.7 trillion. Just little over 30 trillion. Of course, by this time it has grown further. As we already discussed, between HDFC Bank and State Bank of India is about 45%. Banking system will be close to around 80%, and rest of our all non-NBFCs. Year-on-year growth as on mid last year was 15%. So that's the thing. And other relevant factor, which is very important, not so, nobody will be surprised from the experts, I mean the community of experts, but others who don't track for them. Now, as a percentage of GDP, the home loan, where does India stand? India is 11% versus Netherlands 91%. Imagine. Denmark 84%, UK 69%, USA 52%, Germany 49%, Singapore 44%, Japan 39%, Malaysia 34%, Thailand 20%, China 18%. So we are talking about becoming the third largest economy, but when it comes to housing to GDP ratio, we are nowhere among the top 10, 15, 20. We are very, very low. So there is things are happening, but we need much more. With this, I end here, and in the next 40 minutes, they will hear only you. I'll go by alphabetically. Abhinandan, it's your turn. Not because you are sitting in the extreme left. So tell us, you are not a conventional builder community you are representing, because you are actually in the second home kind of thing. And Mr. Khara, who was telling us that the SBI is excited about lending in the second home for the second home project, etc. Of course, he meant in a different way. You are actually in the luxury segment, those who can afford in Goa or anywhere else, or I think Ayodhya also you had in it. Was it planned earlier, or just because Ayodhya Ram Mandir you decided to have?
No, we planned it 3 years ago.
Achha, planned it 3 years ago. Achha, very smart move. So you sense it. Huh? So tell us, how do you find this, both from the angle of the buyers of these properties, and also how do you generate the finance for this? Briefly, we'll have 3 minutes each kind of thing,
Sure.
and then we'll have a wrap up.
So I think one thing which we have seen is the world is changing quite fast, was becoming frictionless. So we, for example, are a digital-only company, which essentially means that we have never met a consumer in person. No consumer has ever met us in person. Our idea is that most of these buyers are looking at this investment in terms of wealth, and investment of storage of wealth. So the mortgage ratio they take is actually quite low. Less than 4% of the people actually end up borrowing. And the conversion is from people who are looking to come back and plow back money into the country, understanding that wealth and land is going to generate multiple times over.
Tell us a related thing, people, all of us who want to buy, whether it's first home or second home typically, and particularly after COVID, people have realized how important it is to have little spacious home, because most of us have transported the office into home for 3-4 days a week. So one is this, we always want to get into a ready-made house where everything is there. I'm not saying that it has to be well furnished, but actually the housing thing. And there is a tendency to be with a needle of suspicion that should we get into house and land particularly, that's because of the land records, because of the opaqueness and everything. So how do you sort this out?
So I think the better thing
Our
is
buyers' approach to land, I mean.
So I think the buyer's approach to land starts with the process of education. Land records in most of the states are moving towards being digital. If you're willing to have the burden of transparency onto yourself and allow digital shareage of land records, most of the issues get taken care of.
Sandeep, because my one is A, and then 3 of you are S, but Sandeep is A, so your turn. Tell us, as I said, when I introduced you, that you got in there and then immediately demonetization came, and then the ILFS, DHFL, the big peers in that space, they fell down, COVID, everything was happening. So if I'm not mistaken, when it comes to Vastu, I think you are probably very strong on digital area in terms of assessment, credit assessment, picking up customers, etc., etc. So tell us about your journey, how easy or how difficult it is.
Thank you to you, Tamal, to the IMGC and the Business Standard team for having me here. And I think very interesting times we had when we started. So I've been a career banker, and when I set out to do affordable housing, we set out on this journey in 2014. I think we got change of ownership and control by end of 2015. So when we started, we had, I think, 50 crores of capital, 65 crores of loan book. Couple of lenders we had, the HDFC Group and Sundaram were our first two lenders. and some others willing to lend to us when actually we were hit by demonetization. So I think there was obviously a lot of anxiety and a lot of stress. And we were fortunate, Tamal, that our shareholders and lenders supported us. We were a professionally run, institutionally managed, board-run company even at that time. That helped us. And I think it made us very resilient to be fit for growth, because we didn't want to be in a situation where we don't want to be in a situation where we can't pay salaries, or you don't want to be in a situation where you can't repay what you've borrowed. So those were our criteria at that point of time. But I think the resilience of the ecosystem, so we've gone through, as you said, from demonetization to the NBFC, the challenges around the NBFCs or the HFCs, a few rounds of COVID, and I think it's been quite challenging. It's not the best environment to build a mortgage financing company, but the opportunity, the runway for mortgages, as you only mentioned, and with 11-12% mortgage penetration, and in the space that we operate in, hardly 4 to 5% or even lower penetration. And if you break India beyond the top 40 cities, the next 200-300 markets, and where the urban and the rural divide blurs, it's a massive opportunity. So I guess it was a function of figuring out the right opportunities, being fit for growth, and as a relatively late entrant, building your own technology, building your own data science, and having normal aspirations in the sense that we didn't want to do anything in a hurry, build it patiently because we believed the opportunity was large. We had patient capital, continued to raise capital and debt along the way, had engaged with rating agencies and others on an ongoing basis, and had general support from the ecosystem, and also calibrate and slow down growth when we had to during those days.
Just one small thing. What's the bad asset ratio in your portfolio?
We are around 1.1%.
Sorry?
1.1%.
1.1%. Okay, we'll come to that. Shobit. Shobit is from the consulting firm, Anak, and I couldn't understand this. They are also, you get investment banking, MD and CEO investment banking? What's
That's
that?
right. I'll just quickly introduce. So, Anarok Capital is basically in the business of arranging money for the developers to see all these projects go up. And we also incidentally do a lot of home loans because we are the largest home sellers in the country. So we sell almost 25,000 homes every year. These are newly built homes.
So in some sense, you have the view of both the sides. One is the retail segment, the demand side, the buyers, and on the other hand, the challenges that the developers feel for arranging the money. So we could not have a better person than you to talk about this. So tell us what are the challenges.
Yeah, I know. Thank you so much. And you know, obviously it's tough to speak after the chairman of SBI has spoken about home loans. But I'll tell you what's happening on the physical aspects. Right, loans can be taken only if properties are built and sold. Right, so basic footprint is that there's demand for real estate housing, and it's increasing. We've been in this business for 20 years. And it's rare, it's almost a rare opportunity where we are seeing that the demand for new homes, newly built homes, have doubled from the low of COVID. We were selling less than about 2 lakh homes a year. Now we're going to touch 5 lakhs. Not only that, it's the highest ever sale since the previous peak of 2014. So it's really taken us 10 years to come back. What's unique about this market and this time is not only are the sales up, so volumes are up, but also the pricing is going up. And the third very interesting aspect, and I'll let Vipul speak about it or deliberate a little bit more, is we are moving away from affordable housing. I think most of the people sitting here obviously want to worry about how to give loans to absolutely the starting point, the affordable ones, but actually less and less affordable housing projects are coming in the country. We are gravitating towards mid-market, upper, then super luxury, right? So the demand profile is changing, right? And most of the 25,000 homes that we sell, almost 75% are people who are buying with home loans. And out of that 75%, nearly 80% of the people are so-called salaried class. So it's a formal sector. It's the people who are struggling are at the bottom end and from the informal market. And, you know, nobody better than this panel to really tell us how that segment is going to be served, both in terms of where the supply is coming, and by the way, if supply comes in, how are they going to be served by home loans and what's really going on, because the delinquencies, I don't know if we can debate this, are higher at the lower end of the market. I think that's what the chairman of SBI also alluded to, saying that's the little bit of trouble. Rest is fine, but the government wants us to build housing for the bottom of the pyramid, and that's a little bit of a challenge, and I think Vipul will probably address it better, but I'm going to stop here and hand it back to you.
Yeah, so we thanks, of course, Vipul will come. Alphabetically, Stuart has to come before that. We'll tell. But tell us, Vipul, you have actually hit the nail of a problem. Is this, you are saying that, well, there are many takers, there is too much of demand for housing on the upper scale, but when it comes to the bottom of the pyramid, the so-called affordable housing, there are no takers. So I have just want to ask you, I'm just provoking you, what does that mean? Does that mean that the K-shaped recovery that we have been, all the economists have been talking about, yes, Indian growth story is very real, we are growing, you look at IMF, World Bank numbers, we are the fastest growing economy, major economy, even for next year also 6.5%, nobody else even half of it. I mean, look at China, wherever else and all. But is this the very skewed growth? It's not for everybody, which is why the segment that for the affordable housing, there's a big challenge, and while people are going for, ready to spend millions of dollars in that convertible into rupee for houses. Is that the right
so
reading?
I'll answer the question in two parts. One is from a demand perspective, what people want, right? I think what people want is a little bit more room at every level, right? So if you have a 4-bedroom house, you need the 5th one. When you don't have a house, you need 1 bedroom, but perhaps you need 1.5 bedroom, right? So even people who are starting at the very bottom of the pyramid want a little bit more space, especially emerging out of COVID. They've realized that they need a little bit of elbow room. What we have done by defining the affordable housing as something being less than 45 lakhs, right? What we've done is we've said price is yehi hoega, aapko jo banana banao. So the houses have shrunk. For that, the bottom of the pyramid, the houses are shrinking because my price point is going up, my construction cost is going up. Government definition says 45 lakhs, तो उनको 250 स्क्वायर फीट का घर मिलेगा या 250 स्क्वायर फीट का या 300 स्क्वायर फीट का, which doesn't serve their purpose. So they are actually falling off as the government definition of affordable housing. Okay. So they will probably want to spend 55, 60 lakhs, but that doesn't then qualify for affordable housing. So I guess we have to go back and relook at what the definition is and what is the right amount of, what is the qualifier for affordable housing. Today it is 45 lakhs.
That's the one part you said. Second part you said.
Second part is, I fundamentally said that the demand is moving towards a little bit higher area. So post-COVID to now, and there are not many developers in the room, but actually our house sizes or apartment sizes have increased. What was 800 square feet has become 900 square feet. What was 1,000 square feet has become 1,200. That's the demand. So I'm saying the demand itself is seeking a little bit bigger apartment to make sure that they live well and they live healthy.
Sure. The higher end demand is going up, and you are saying it is a time to redefine the concept of affordable housing. The 45 lakh pricing is too low.
Yeah, I think we should get away from pricing to unit size, right? Okay. To say what is the right way. Why should we lock ourselves with pricing? Pricing in Calcutta will be very different from pricing in Ahmedabad. But why should we say 45 lakhs? We should say a good quality house should be defined as this, right? This is the minimum size of housing that somebody should get.
Sure. Thank you. So here, Stuart Take, who is the board member of IMGC, thank you for coming all the way from somewhere in New York you are coming from. And, North Carolina, and you love Indian food, right? You love India.
I do.
That's for food or for people?
Well, the people first, and then the food.
Okay. People first, then the food, and then the mortgage market comes. So tell us, what should India learn from different regions, like be it Singapore, Malaysia, everywhere else?
Yeah, so I think when it comes to market resiliency, it really is about developing a culture of trust between lenders, consumers, and investors. I think it's really that simple. And that gets down to 2, 3, 4 elements, the first of which is developing a sound infrastructure around lending norms, underwriting, appraisals, title insurance to the extent it exists in the market, foreclosure laws, collection laws, things like that. It needs to be consistent. It needs to be consistent across the market. I think the second thing that's important is strong regulatory oversight, which is pretty broad when you think about it. It involves not only financial soundness, but it also involves things like financial inclusion, and it involves making sure that there's consumer protection laws in place so that people are willing to take the risk of borrowing money. And lastly, I think the environment needs to be set up for investment, and not just local investment, but investment from foreign players such as multinationals. And I think where possible, the investment needs to be diverse in nature, equity, debt, as well as securitization and things like that in nature. And I think those three things pretty much de-risk an entire environment to allow for a resilient ecosystem.
Yep. Stuart, if you can tell us a little more, I mean, you being a board member of IMGC, and IMGC is about now a decade in India. So you have got an opportunity to look at the housing market here, right? So how it is different from others? Because, you know, it's always the community of builders, no offense intended to you, Avinandan, but it's always people are talking about lack of transparency. Of course, RERA is addressing that and all. And we are always paranoid about booking a flat somewhere which has been coming up. We do not know whether there will be cost overrun, how much, time overrun, how much. So in some sense, this is one area, it's still not as transparent as that should be. Is it, I mean, how does this Indian market, how is it different from, apart from any of the other challenges, per capita income and affordability, that's the economic story. But in terms of habit and the contour of the market, how is it different from other markets?
I think India is fairly transparent market. I don't, at least at a consumer level, I don't see any issues whatsoever. And it's not that way globally. I won't go into specific markets, but it's just not that way globally. Transparency certainly helps out, and it builds that trust I mentioned in terms of the ecosystem. And I think one big lesson was during the financial crisis, 2008, 2009, where there were some exotic products out there, at least in the United States, and there was a lack of transparency, and borrowers certainly didn't know what they were getting into. We don't see that lack of transparency in the Indian market at all, certainly in the areas we're dealing with.
Vipul, you want to say something about this lack of transparency and all? Yes. No, not Vipul, sorry. Abhinandan, I'm coming to Vipul towards the end. Yeah, tell me. Am I too harsh when I say this, or do you think there's genuine reason for this?
No, I think there is a historical track record which justifies a thought process that developers have not been the most transparent breed.
Little louder. Huh?
But as things are changing now, and as the market is really realigning the difference between transparency and lack of transparency, including from the demand and borrowing side, I think it will lead to a slow push, quite a rapid push actually now, which will force transparency across the board.
Vipul, he sold you too much now. From the beginning, I don't know, you must have a pact before coming here that... Yeah, so he kept on saying that Vipul will have the answer, Vipul will have the answer. And it, incidentally, because you V, so he comes at the end, so go V for victory. Tell us, he says you know everything. And Vipul is from HDFC on AIF fund. Probably you are the largest fund in the real estate segment, or was it Kotak? Is it Kotak's? Or?
It depends. You are the statistic guy of the statistics, so maybe you will know, but at least the statistics I have, I don't think how large you are as a fund defines your identity. I think in the fund business, what returns you're making is more important. So I can very safely say that at least our investors feel that we are one of the best performing funds.
Who are your investors?
So we are in fact the largest relationship for ADIA, which is the sovereign fund of Abu Dhabi, NIF, which is the sovereign fund of India, and about 3 or 4 other family offices.
Okay. So tell us, what are the issues? I particularly, again, I'm repeating that on the supply side. Like I want to buy a flat or anybody else wants to buy a flat from here, the banks are chasing, and after a year I can shift my loan to some other bank who's ready to take over my thing at a 25 basis point lower, my EMI will go a little lower, so on and so forth, all these things. But when it's come to builder, supporting them, there are not too many entities, because the Reserve Bank of India norm does not allow the banks to go for, to support buying land. So that's one part of it. Second part of it is the so-called lack of transparency. You don't know how much cost overrun, how much time overrun. It's a little bit of opaque thing and all. So tell us that what exactly, how do you sort this out? On the supply side, the builders, how do they get finance? So that, it's not only one side thing that we look at this side, but how, if the other side does not support, we cannot have a perfect mortgage market.
Okay, let me try and break it down just to give perspective, because you quoted some numbers, Tamal. You said mortgage is about 11% of GDP.
Yes.
And you talked about the book being about 3 trillion rupees.
30.7.
300 trillion. So let's say in dollars terms,
30
it's
lakh
about
crore. 30
so
lakh.
So if India's economy is about $3.5 trillion,
yes.
We are talking about a mortgage book of about $400 billion.
Yep.
If India becomes and we are 11% of GDP.
Less than 400 even now.
Approximately. So if we become a $5 trillion economy, and our mortgage percentage goes from just 11% to 15% as against 91% of anybody else, we are talking about an incremental mortgage requirement of $350 odd billion. Yes. Now this $350 or $370 billion, for every $350 billion of demand side financing, which is financing the buyer, the corresponding number from supply side, like the fund that I run as part of the HDFC Bank group now, is a supply side. That is, my job is to finance the developers to do projects, is about 10%. So what is $350 odd billion is about $35 billion is the size of the book on the supply side. So you need an incremental $35 billion, assuming the ratio remains the same,
yes,
only to finance all that.
Yes.
And so that's one. That I'm talking in terms of the numbers. To the question about why credibility and why this thing. See, traditionally, it has been, as we all know, a complicated industry. Repeatedly, globally, why is land financing not allowed? Land financing is not allowed because there have been global financial crises that have happened because the lenders have been over-aggressive on funding of lands. What happened in the Asian crisis in 2008 and so on and so forth. And I think the regulator has been fairly conservative in India, and which explains why active lenders are not allowed to do real estate financing. Having said that, it is trying to push the development community to bring equity on the table. Case in point, what is happening in the last 24 months, equity can come from public markets, equity can come from capital market, from private equity markets, equity can also come as lending against his other projects into this. And in China, before a RERA kind of a thing happened 20 years back, there's not a single developer who had a market share of more than 1%. Post a RERA equivalent in China, the top 10 developers had a market share of almost more than 50%. Something of that sort is gonna happen in India, because as the effects of RERA, consolidation and everything happens, more professionalization will happen of the industry.
In the world of developers.
In the world of developers. And as professionalization happens, I am not be surprised if SBIs of the world and HDFC banks of the world will start approaching them with much more alertness and say, okay, fine, they're part of the mainframe.
Abhinandan, do you agree? There will be sort of reshuffling and rejigging in the entire world of your real estate segment? He's saying consolidation. That's what you said, right?
I think consolidation is
little louder.
So consolidation is quite clearly on the go. It's happening. It doesn't mean the smaller guys won't exist. It just means that there'll be a very large difference between people who are large, are able to command a premium, have a brand, and are able to borrow at a cheaper cost, And people who are able to look at real estate the old way and say owning an asset is more important than being able to own it as inventory. So consolidation is the buzzword. It will continue to happen for some time to come.
No, so for example, 4 years back, not a single developer in India was selling on residential more than 10,000 crores a year. This year, I think there will be at least 8 to 9 developers who will be selling more than 10,000 crores a year of residential stock. There will be at least 2 who will sell more than, or 3 who will sell more than 15,000 crores a year. So obviously the consolidation is kicking in.
So are you happy with whatever said, or any question you have? Absolutely, I agree with this. Now that though you already did before they even started, you guys tied up. But tell us, you are happy with his answers or want to add something?
Yeah, no, I'm absolutely in agreement. And I'll just give you some numbers. At COVID times, we were selling 200,000 homes, that's 2 lakh homes. And the share of listed developers in this 2 lakh was 19%. Today, we are selling 5 lakh homes, and the share of listed developers is up to almost 39%. So consolidation is the way to go, because transparency has come, everybody needs the balance sheet, book size, etc., etc. Not many developers can afford to continue to grow as fast as those that have very healthy balance sheets and correspondingly very good corporate governance.
Yeah, and if you look at the stock prices of some of the developers, that also shows the change.
That also shows
how they have been
the market cap,
growing.
of course, has gone up for the good developers. Yeah.
But at the end of the day, I think developer financing still it's an area of concern, because I understand that there are particularly the smaller developers, they get hold of some people and those actually become a proxy for the developers, and I think in your parlance called profile funding, something like that it happens, right?
I think it used to happen, it's things of past, so let's leave that out. I think post-RERA all this is stopped. Okay. There is no question of profile funding and all of that, it's gone out the window. Okay. So good times are here, at least for this sector.
Let's have a small round, maybe a couple of minutes each, or 2-3 minutes each maximum. That's what, after that we'll have Mr. Parekh, have a conversation with him. Rounding up, starting with you. Sandeep, tell us that what I was talking to Mr. Khara, State Bank of India chairman, like NBFC and HFC, there are 2 types, like the normal NBFCs give money to housing finance, and there are also dedicated HFCs which will give anything and all. Now, the HFC and NBFC, unless then HFC is where the operational cost is in single digit like HDFC had, okay, so that they could work on 2% NIM kind of thing, because there is operationally extremely efficient. But otherwise, considering your cost of fund, you need to go to a segment which is not catered to by the bankers, right? Now, NHB is a big financer of yours, your kind, meaning your meaning, I'm not talking about you, but your industry and all. So who are the others they can fund you so that you are able to bring down the cost of funds and change the profile of the customers? Or will it be the permanent architecture of Indian mortgage segment, the banks, salaried class, or those have income kind of guarantee, etc., etc. And your kind will always go to the backwaters or others, that kind of segment, and the difference between bank lending rate and your lending rate will continue to be maybe 2 to 3 percentage point. How do you change it?
So Tamal, I'll just answer your question in a couple of parts. First of all, if you look at demand for, say, affordable housing, so India, if you take out the top 6 or the top 10 cities, which is where the urban agglomerations, the large apartments, and the apartment business is there, is one part of the business. Large part of India is self-construction and individual houses and rural housing. And that's the singular biggest opportunity. That is what, so if you go beyond the, say, top 40 cities, into the next 200, 300, 400 markets, and into the markets where the urban-rural divide blurs. And as Mr. Khara said, if digital land records, if strengthening of RERA, and in terms of making sure that, say, something like a uniform stamp duty across states, if some of these things actually happen and affordability goes up, then there is a genuine market beyond the apartment business. Because India is a self-employed country, and self-employed Indians build their own houses in the smaller towns. That's where the real prosperity is. The GDP that we are seeing, the GDP growth is not just from the urban markets. And it's about self-construction. It's about every time there is a marriage in an Indian family these days, in small towns, a new house is looked for. So that's where the small demand is coming from. And I think I agree with the fact that size should be the definition. But you have to differentiate, say, the top 125 districts in the country, the next 200 districts, and the balance. And how do you see a set of districts that are growing way beyond the GDP? And also prosperity that's coming in. So I guess for people like us, if we are in a situation that we have to compete with our own lenders in the same business, then we'll be out of business.
That's precisely I'm asking you, that you are taking money from banks and giving to the guys who are banks also are prospective customers. So how do you manage that?
So I'll give you a simple example. Self-employed is not lent to that much. So there is an opportunity for us to make our 2-3% in the smaller towns, in the smaller markets. And that will continue to be a growth driver. And today there are many different pools of debt capital. The bond markets are again opening up. There's a lot of multilateral and significant amount of other funding that's available. So it's not just about NHB refinance or borrowings from public sector banks. And I think recently NHB has come up with RMBS and mortgage-backed securities, where I think HDFC and ICICI and a couple of others are taking stake. So I think a mortgage security market is developing in India. Refinancing of various who's will happen. So I think what you see in the US in terms of what a Freddie Mac or a Fannie Mae, you will see a lot of that happening in India. And a lot of that, while there is massive opportunity in the premium segments or the higher end segments, there is a uninhibited runway for the next 30-40 years, I would say, for the smaller towns, for affordable housing, and for a variety of other things to grow sustainably, peacefully. And I think the railroads have been built. There are tested trade bureaus. So the self-employed, the MSMEs and others, and the people who are actually buying these houses are willing to pay you that extra because they're going to stay in those houses. And when you bet on a self-employed Indian who's staying in their house, your probability of default is not that high.
Thanks, Sandeep. You spoke about Freddie Mac and Fannie Mae of US, and nobody spoke about UK building societies. I'm talking about that. And better than that, what was created in India, that's HDFC, one single product company, mortgage, and the gentleman who made it, Mr. Parekh, just walked in. So give him a big hand. Give Mr. Parekh a big hand. We'll have a 5-7 minutes, then we'll have a conversation with you. Tell us, Shobit, give us a sense of the markets. Like from you, we'll get to hear which are the overheated market, what's the most expensive market, what is the demand maximum, so on and so forth. Give us a little macro picture of India, what's happening. And maybe you'll help Sandeep to plan his strategy, where to go. Because he is competing with banks, right?
I'm not.
Taking from the bank's money. He's not, okay. How to avoid competition? Tell us.
Look, urban, like he pointed out, Sandeep, saying urban and rural is a big divide. In India, we track top 8 cities, which roughly constitute nearly 90% of all the sales. So 90% of the sales are done by value, are done in these top 8 cities, right? Within those 8, MMR, which is Bombay, followed by Bangalore, followed by Delhi. These cities of that 90% are close to 60% of the sales, right? So these 3 cities are big magnets, call them alpha markets. That's where the growth is as far as real estate housing is concerned. Then of course the markets keep shrinking. You have Chennai, you have Hyderabad, you have Calcutta, Pune, Ahmedabad. That are the rest of the market from the 90%. It's really, these markets are between 4 to 5% each from a volume perspective of the overall India sales, right? Of course, there's Bhopal, there's Jaipur, there's Goa, right? All of these markets are active, but these are basically markets where people like to build their own houses, buy plots, build slowly, and what I would call them expandable homes. So you start with 2 bedrooms, you need more up space, then you build upstairs, so you build sideways. It's not that you buy at one go. And these are build as you go sort of markets, very, very different in values, very different buyer profile, very different way they operate. So really from a banking perspective, when you look at your own exposures, I think these three markets will be more than 50% of your books, no matter what you do. While we'll all love to lend in smaller markets, but the reality is that the demand is in these three markets.
And how do you see the pricing? How do you see the pricing?
Pricing is up everywhere. Bombay was the first to start going up, followed by Delhi, followed by Bangalore. Obviously, Bombay is where wealth creation is done the fastest because the stock market is here. I think people love to invest in that market. And that market never shut down even for one day during COVID, right? So it was working no matter what. So really people have made a lot of money in the last 3-4 years in the playing the stocks. All of that money, when it's pulled out, a lot of it goes into real estate. Now, of course, Delhi and Bangalore are also seeing that trend. So we think these markets will continue to go up in price, but correspondingly the cost of construction is also going up. So it's not that the margin for the developer is increasing, it is that the margin is sort of sustained because costs are going up, and so also is the revenue.
So with just last one thing in a minute, does investment in real estate, does it continue to be as important, as lucrative as someone else? Because people say we don't keep all the eggs in one basket. So I have in the stock market, I have into gold, and I have into real estate. And predominantly it was real estate but decade back. Has that come down?
For 10 years, we got beaten down.
Yeah.
If you spoke about real estate, they say you stand outside the room, don't be in the room where investments are being talked about. So for a very, very long time, we were outside the game. We have just come back, because prices have started to move. Okay. But as the single largest broker in the country, even today 95% of the homes are only being bought by end users. End user. There is no speculator like was the case in 2014.
So
right?
pre-RERA.
We are very, very self-used or self-occupied homes.
Yeah.
And by the way, like any other country, you spoke about so many countries, Denmark, US, we are the only country that consumes our house for at least 3 generations. Our friends in the West live in 5 houses in their life, where they are born, then where they grow up, then where they're married, then where they go before they die, and eventually somewhere else, right? So we guys live 3 generations to 4 generations in the same house, and we are very reluctant to upgrade. So we will make ourselves inconvenient, but we will continue to stay in the house even if it falls a little short, because we like to stay with our families, right? So It's a very different way to consume our house, and therefore it's a very long-term investment. It's very liquid.
Thanks, Shobit. Stuart, tell us some suggestions, stroke advice, how to pep up the mortgage market. 11% of GDP, and we are talking about how to push it up, how much investment is required and all. So give us some, from an insider's perspective, what do you think the Reserve Bank of India should do, or as a regulator, and the government should do?
Yeah, so I think one thing for sure that would help stimulate the housing market is a proper securitization market. I know there's whole loan sales, what we can consider whole loan sales. I know there's pass-through certificates, but I think a proper government-sponsored securitization market would greatly enhance the financing into the system, and probably stir international interest. I think the underwriting norms are very sound in India. I think moving more towards exotic products or loosening of underwriting guidelines would not be a very good idea at all. I do think certainly mortgage guarantee gives people comfort, lenders comfort when it comes to the lending. So certainly the development of that area would help as well.
Thanks, Stuart. Very brief. Vipul, you said that you don't know whether your fund is the biggest, but investors are the most happy because you're giving them return and all. So tell us, a fund like AIF in that space and all, what are the challenges we discussed and all, but what is the way forward? I mean, how do we make this the other side, supply side, the way there is always fight among the banks, among the lenders, to get the customers. So one bank is snatching the other customer and all. But that's not happening on the supply side. It's more shortage of funds. So a few suggestions and advice from you.
I think I remember while growing up, there used to be a thing of from the house of Tata, which said that we also make steel.
Yep.
And I think as a financing community, especially from the fund community, that part has to come in the real estate side. Case in point being that today, if I'm a venture fund which is doing general venture financing, it's not only the financing that you're providing strategic inputs, you are giving them product related inputs, you are helping them scale up their organization. I think real estate developer set, notwithstanding some of the established ones, is still a growing community, and the financiers need to play a role which is way beyond just providing capital. Whether it's debt or equity, it has to be strategic in nature, it has to be product specific, it has to be how to help them scale up. And that, in my opinion, results in the delta which funds and various other banks can operate, because otherwise, if it was just cost of financing, then the lowest cost capital provider would have super majority market share, which is not the situation. And I think coming from HDFC, the whole play has been that it is beyond what money I'm providing. It is what is the value add. And I know of developers who are dealing with the organization for 3 generations, 4 generations, not because you're providing capital. I think it is about what kind of inputs, what kind of credibility and other aspects which are provided. That becomes a key factor.
So beyond capital, handhold them, which some of the funds do, and HDFC of course known for its giving training to people and how to approach, to cut down the cost overrun, time overrun, etc., etc. So you are saying that is very, very critical in addition to finance. Finance is correct, but beyond finance.
Yeah, absolutely. Like we talked about areas, I think devil lies in the details. Shobit talked about 6 cities. I think this market is about the next 25 cities. Every big city today is not a big city. It is a conglomeration of, in a 1-hour radius of this place, what I could travel 5 years back and what I could travel next 5 years will be totally different. And with all the infrastructure that is going around. So what will happen is that there will be a hub and spoke kind of an ecosystem, which a lot of major cities will happen. When that happens, it is critical that you are able to emerge what are the next 10 big cities or next 10 emerging investment areas. These are the kind of inputs that the developer community would want, and that is where the financiers who have much more data points can provide.
Thanks, Vipul. So, Shobik, is it okay? Fine, whatever you have said?
Absolutely. Vipul saying the right thing, that infra is changing the context.
Yeah. So, Abhinandan, so Ayodhya, are you, because Bachchan said that he is buying land there and getting a bungalow, and he asked everybody to buy because of the, for multiple reasons. So would you also sell your stuff to all these people, Ayodhya property and all, big discount here? Dene wala hai kuch? Huh? Okay, on a more serious note, yeah, I mean that you can do this outside this, over dinner you can sell your property, that's not an issue. So, but you are the only developer here in these 2 panels and otherwise. So tell us, I mean, what is the way forward? RERA has brought a lot of transparency, but as I said, before anybody books a flat, not even second house, which is you're very different, you're offering a second house, that's a separate story. But even the first house and people buy that, whether it will be in 3 years what you promised or it will go for 10 years, how much money, etc. These are all litigation, everything you see particularly in Mumbai. So how do we change the perspective or the how we look at, the masses look at the developer, the community of developers? What is to be done, you think? Some soul searching just in a minute.
I think there is already a massive change underway because of RERA, and you see the amount of litigations and questions which have come down quite substantially. I also agree to what Vipul was saying as a, India is changing very, very fast, and growth and future is going to come in tier 2 cities where people have not had this kind of a bad experience, where people have seen developers being much smaller but delivering what's been committed. So I think as tier 2 India changes to tier 1 India and good quality developers go there with today's RERA regulations, etc., it will mean a massive addition to consumer confidence, which will add the next generation to come.
So thank you, and that brings us to the end. You have heard them. Yes, the market is not too large, but all the ingredients are in place on the table to grow and how the things are changing. He's talking about how the tier 2 cities are becoming tier 1 in terms of affordability and aspiration and ambition. You spoke about how the affordable housing needs to be redefined because things are changing. So things are changing for the better, right? With that happy note, give them a big hand, please. And we will start with Mr. Deepak Parekh after a minute or so. Thank you, sir.
Thank you so much, panel members and Tamal, for that incredible set of panel discussion. At this juncture, can I request Mr. Stuart Levings, President, CEO, Sagan Canada, to hand over a token of appreciation to all our panel members. Ladies and gentlemen, few takeaways are need for holistic and balanced growth across social stratas and income levels in India, need for developers to take on more affordable housing projects, rising demand for bigger homes among the middle class Indians, affordable housing to go beyond price points and include amenities as well, and developers needing to be more accountable and maintaining transparency with buyers to build trust. I think exceedingly candid and insightful. Ladies and gentlemen, let's build the momentum of conversation which is bound to leave us with many meaningful triggers. In a few moments from now, we'll be actually witnessing a riveting fireside chat which will also entail Mr. Deepak Parekh, Chairman HDFC Life and HDFC AMC. So I would request you to please stay back as we get started with our next set of fireside chat. Thank you once again, all the panel members, for sharing your perspectives in such a candid, perspicacious and pragmatic manner. Thank you. All right, ladies and gentlemen, let's begin with our fireside chat. As you all are aware, it will be chaired by Mr. Deepak Parekh, Chairman HDFC Life and HDFC AMC. He's known to be an institution builder, a leader, an entrepreneur who has actually metamorphosed HDFC as a global name. And I think I will not hog a lot of airtime at this juncture. We have with us Mr. Tamal Bandyopadhyay, Consulting Editor at Business Standard, to navigate, to maneuver this part of conversation and dialogue.
Good evening, and Mr. Parekh repeatedly has been telling me, don't reel out my bio, etc., etc., etc. So, thank you, sir. But before that, if it's okay, can you have a cup of tea and that chocolate-coated biscuit, sir? That is your favorite. If we have?
No, I don't need anything.
Okay, you don't need it. Mr. Parekh, people say that he typically attends 5 weddings a day. There are some days, and even 6 parties a day. But it has not been easy to get, sir. I mean, it's one of the rare occasions Mr. Parekh is here. And he wears many hats. I don't need to tell him, because repeatedly he said no. But one, I'm just tempted to say that he is the unofficial crisis consultant for the government of India. You look at the history of Indian economy and BFSI segment from economic liberalization. Every crisis, Mr. Parekh is there. Whether it's a UTI restructuring, Parekh committee. Whether it's Sattam crisis and Sattam rebuild, again, Mr. Parekh. Whether it's a Narsimham committee on banking restructuring, Mr. Parekh is member. Malhotra committee on insurance, Mr. Parekh. Infrastructure committee, telecom committee, I mean, you name it. It's always
Thank you.
is Mr. Parekh, Mr. Parekh, Mr. Parekh. So it's apart from the fact that he built, yes, his uncle was the architect of HDFC in 1978, and 1987 he quit his job in Chase, right, sir? It was Chase, and 50% cut as a deputy manager he came, and then he created history, identifying the HDFC chairman. That's also him, and who would run the bank. So here I stop, because you will get angry now, upset with me. I mean, we can talk and talk and talk what he has done for the Indian financial system, infrastructure, telecom, roadways, airport, etc., etc., etc. So, Mr. Parekh, I don't know how many of you know that when this COVID struck and all those, it was a sort of dark days for entire India, entire world, and particularly for the real estate segment in Bombay. And then Maharashtra government reached out to Mr. Parekh, a committee headed by him, how to revive. And then he came out with the plan of cutting the registration fee, I think 50% and some even less, and also how this stamp duty, of course, and also you did certain things about how the builders can get more SFI very smoothly, and compensation for that will be less and all, and that revived the market in Mumbai, market in Maharashtra, and the other states started replicating that. So this is a mortgage seminar. Why don't you tell us, sir, why did you do that? How did you do that?
First of all, let me tell you that there's no other journalist as persistent and persuasive as Tamal Bandyopadhyay. Not only he followed me and forced me to come, but he also forced me to wear a jacket, which I don't wear normally. Anyway, this decrease in stamp duty and the increase in FSI, this is a one-time exercise for a short period of time just to kick-start the housing sector, which was in the doldrums. Housing sector was in the doldrums. People were reluctant to buy. The demand was there, the latent demand was there, but people were not willing to buy. And this gave an impetus and a time limit that in 6 months or 3 months, the stamp duty will again go up. The FSI, extra FSI, you won't get after a short period of time. So that got the developers enthused to take on more projects and take a higher FSI. That got consumers to go out and buy and save some money on stamp duty, and that's how it started. And I have never seen the housing market as buoyant as I see today. We were talking about 7 cities and 6 cities. I think the number of residential units sold in 2023 has been 5 lakh units. Mind you, these are residential units built by developers. I'm not talking of land, people buy land and building on them. That is over and above that. These are flats that have been built by developers. So 5 lakh residential homes. And out of that, 15% have been in the MMR region, Mumbai Metropolitan Region, which excludes Thane and Dombivli. So Mumbai Metropolitan Region has seen 15 out of the 5 lakhs, 1.5 lakhs. So the housing market is booming, and this is a 31% growth over the previous year. So, the developers have not had it so good. And we saw growth in all the cities, except North, where at least what we saw was bringing down the unsold inventory. There was a large unsold inventory in North India, which came down sharply as the housing sales increased. And the point that you made on Maharashtra government's one-time incentive was just to kickstart the economy, the housing sector. And it worked. And they reversed back to the original stamp duty and the original FSI. So it was a short-term gimmick to kickstart the housing sector.
And some of the other states
followed.
Latched onto that.
Some of the other states.
Yeah. Mr. Parekh, we have been discussing about this affordable housing. One is this: there is an incentive scheme. I think it's called CLSS, which is stopped now, and I think in some format it would come now. Other part which has come out from this, from talking to people in the panel and all, that affordable housing needs to be seen through a different lens, because the kind of pricing which is talking about, we can't have the kind of, with that kind of pricing we can't have houses in certain areas. And also post-COVID and all, and the economic growth, the ambition and aspiration of the level, of that level, even below poverty line, also gone up. So, sir, I mean, as I said, you were there in every committee of the government, be it infrastructure, telecom, and airline, and everything else. So, tell me, how should we look at this affordable housing, and what needs to be done?
See, again, the impetus of affordable housing came when the government introduced the CLSS, Cash Link Subsidy Scheme.
Yes.
And the Cash Link Subsidy, we were the largest institution dispersing loans.
HDFC.
HDFC. And the scheme was very well managed, operated by National Housing Bank, and the full credit should go to NHB, because we used to fund a person up to 90%. So he had to put a very small amount up front. And we could get 10% of it back from NHB. And the government subsidized for first-time owners. And there were restrictions on the size of the house and all that. But it worked well, and it again encouraged builders to make smaller housing because the demand is there. Now, unfortunately, today, I see very few developers making affordable homes, making small homes, because the demand for luxury homes is so high. Most of the flats sold in Bombay are over 1 crore and above. Now, those are not called affordable homes. So we have to come with something which incentivizes the developer, which makes the developer take on projects to make 400, 500 square feet homes, and some incentive should be given for that. Otherwise, we are leaving the mass janta behind, and only the middle class and upper middle class, lower middle class, upper middle class. But we have to concentrate on affordable housing, which unfortunately in the housing boom has got, after the withdrawal of the CLSS scheme,
Yes.
it has got lesser importance. But the finance minister did mention in the budget that urban housing, for urban middle class housing, they'll come up with the scheme subsequently.
So that scheme, what should be, how should it be different from that earlier CLSS scheme?
We don't know. We don't know yet.
No, any
government has
from
not formulated anything. We tried to tell the finance minister, the government, that the CLSS scheme should be continued, but they had some budgetary constraints, so they had to withdraw it. But we don't know what the new scheme will be. I think the new scheme will only come in the budget post the elections.
Mr. Parekh, after HDFC's merger with the bank, now in private, the developers say that now there is no financial institution where we can knock the door for finance, because under the banking norm, Reserve Bank of India does not allow the banks to give developers financing in terms of buying land. Now, if the banks will not do, and the banks are about, say, 80% of the entire 7.5 trillion market. So how does this side, which is the demand side, supply side. Demand side, everybody is buying houses, and government is trying to figure out certain schemes for certain segments of society, and the bankers are giving money. Some people are getting and some people are not getting. That's a separate story. Or they have to pay a little more to the NBFCs than banks and all. But when it comes to developing, buying land, HDFC was sort of the only safe haven for them, but now HDFC is not there, and we can't blame HDFC Bank because the bank is not allowed. So how do we fill in this HDFC's absence in the market? And in a larger question is this, how do we address the supply side issue?
See, I think it's a fallacy that banks are not allowed to lend for land. In any urban area, where you look at London, New York, Bombay, anywhere, land constitutes 60-70% of the value of the house in urban areas. It's the most valuable part in a house. The construction cost and all the other architects and engineers is much lesser. In fact, in South Bombay, some developers say 80% is land cost, 20% is the construction cost and their margins. So if land is 80%, you have adequate security to lend some money against land. Now, what is happening is, since banks are not giving money for land purchase, and land is the single most expensive, most largest component in the cost of a house, developers have to resort to short-term borrowings from NBFCs, from foreign firms, from firms like Vipul, who charge 17-18%.
AIF.
Yeah, AIF. And they charge 17-18%. These are short-term to medium-term loans, because as soon as they get the land, they get the registration, they get the plans approved, and they start construction. After they start construction, they go to a bank to get normal construction finance, and the loan is, the NBFC loan is repaid. Now, I think this is the wrong policy. Nowhere I think the banks don't lend for land. If a buyer, developer buys land, why can't we lend 50% of the value of the land? The land is not going to go away, and it's urban land. So I can understand rural land where title problems are here. You know, here in urban cities, we do 30-year check. The lawyers do a 30-year check on land ownership. So we don't have an issue of right title also. So the title is right, and you know what is happening in big cities is all the factories are closing down and going interior, and residential housing are coming. You saw Siemens, Glaxo, number of Tata factories, Voltas, all of them have gone much beyond, and they've shut their offices and they've sold it to developers. So I think that to encourage even affordable housing, banks must be able to lend for land. It is a safe security, provided you do your title search, provided you ask the developer to put 30, 40, 50% also in the value of land. Why increase the cost of the house? Developers are borrowing in the informal market at 22% to buy land. So that much margin is there. If you want the real estate prices to come down and become more affordable, why can't banks lend money for land? I just cannot understand that. And the second thing which I don't understand is prepayment charges. We are not allowed to take prepayment charges. I heard the earlier session when you were talking about securitization. You know, retail securitization is taking place every day, where State Bank comes and buys a loan from HDFC after we've dispersed, 6 months afterwards. No prepayment. Or Bank of Baroda buys it, or we go and buy it from ICICI. If you know the amount of refinance that takes place in the first 2 years of new loans dispersed, it is mind-boggling. Each organization have a team of people trying to get loans from other institutions to grow their book. At the same time, they're losing, at the same time, they're getting. Why waste time? We want incremental housing. We want additional housing. We don't want substitution. So retail securitization in a type is happening.
Sir, I mean, you said that it's very true that one HDFC gives a loan and the next 1 year...
it's taken over.
Taken over.
By my friend Dinesh Khara, who was here earlier.
Yeah.
And we go and take one loan from him, one retail loan from him. So, you know, it's a...
But the reasons is probably 25 basis point cheaper, that's a separate story. But once it's from HDFC stable, the next lender knows for sure the certainty about the property and all, because your credit appraisal and risk management is so meticulous.
You know, Tamal, in one of your papers, I've seen an advertisement from a bank saying that HDFC loan holders, we are happy to refinance you at a lower cost.
Right, sir. So
advertisement in your paper. Now this is the market. And we need more housing loans. We need more housing, not just take one and give one.
No, but tell us, how did you create that kind of mechanism?
Prepayment charges, worldwide there is prepayment charges.
No,
first 2 years if you prepay, you have to pay a penalty. That discourages people to bargain for a 0.1% savings in interest rate.
No, that's absolutely, when your point is very valid. Two things you made, that one is Reserve Bank of India must allow the banks to finance land, because in particularly in urban areas, they are pretty good land records, ownership is not an issue, and is fully collateralized, and the builders also should put some money on the table, and the bank should come in.
It has to be 70-30.
And second thing you are saying is this: if you want to expand the market, it's not through the repaying and changing the bank or changing the lender to create new things and all. So that's absolutely clear.
And some stress on affordable housing, some incentivization must be given. Otherwise, why would a developer build a 500 when Abhinandan can sell 1 crore and above flats? He doesn't have to build small houses. There's better margin. There's a fewer customers to deal with. It's assured of, because they are well-to-do, he's assured of payment.
Abhinandan, you are here listening to him? Okay, he's there. Okay. So just tell us now, but how did you create that image that I am ready to take over HDFC Bank's loan? Because you are not very tech savvy in terms of HDFC, never had that thing that you are based on AI and other things and all, not that kind of digitization. So this risk management and about going through this, is there any lesson that our audience can learn from HDFC?
No. Risk management is, first of all, 80 to 85% of our borrowers were salaried employees. So salaried employees, you can gauge their income, their repaying capacity. And every non-salaried employee, every self-employed person always says that my income is much more than what I'm showing. And they want a higher loan. But we never gave a higher loan. We gave loan exactly according to the salary shown or the tax paid. The returns showed what is the revenue, what is the income. And we did not do funding the house, we did a cash flow funding. So even if a person says, I'm paying 80% and I only want 20%, but if he's buying a house where even 20% is difficult to service from his income, we will not fund it. So it is, you have to fund on the cash flow and not on the value of the house. Because that's the first principle of risk. And then you have to ensure that his investment is there, his sweat is there in that, and you disperse after he puts in 20-30% of his own money. And it should be visible from his bank account, it should be visible from the developer's account that he's been paid. So, he has his equity in it before you start lending.
So the so-called loan to value, LTV, always
loan to value. Loan to value, and his contribution should come first.
So LTV is what, 80%? That is your contribution?
70 to 80.
70 to 80, and I need to bring in 20 to 30.
And salaried people are more reliable because their income is more certain. Business people, volatility is high in their incomes.
So the HDFC portfolio is predominantly salaried people?
It is salaried. I would say 85%. 80 to 85%. Now salary, government servant, railways, army, across the range.
Mr. Parekh, also tell us, say like, if we see in India, it's now 30.7 trillion, 30 lakh crore, 30.5 lakh crore, which was last June end. It's more now. There are banks, there are NBFCs, and there are HFCs. Now banks loan rate is the lowest. Right now it's 8.25 something. In the recent past it came down to 6.5, 6.75, etc. NBFC is the highest, HFC is in between. Now an entity like HDFC, which is a single product company but hugely profitable and always right kind of growth, 20%, 25% growth every year. Now you did not have bank deposits, but you are taking money from public, right? But you could compete with banks almost on the rate front and all. And as a result of that, your NIM was pretty low, about 2%. But still you are supremely profitable because your expenses was very low in single digit. So how do you do that? How do you run a mortgage company where money is in short supply, particularly long-term money? We don't have the long-term money, that kind of market here. But you continuously need to source money and you give loans to people at a very affordable rate, and at the same time keep the investors happy by making tons of profit.
No, so you see the top line for a bank and a top line for an NBFC. At what rate they get deposits and we get loans, or we get term deposits. They have SLR and CRR restrictions. They have priority sector lending. We have minimal restrictions. So when you come after that,
But as a large NBFC now, systemic risk,
now you have to do LCR and all. But
Yes.
that time we had 30, 40 years of free time
Okay.
when all these rules were not there.
Right.
And there was an arbitrage between banks and NBFCs. And so we took that advantage, and we could compete with banks because our cost income ratio was very low.
How could you keep your costs so low?
Efficient underwriting.
Because
low
it's not that you don't pay your employees well. You pay well, you give them stock
No,
options.
but we are not the best paymasters.
Okay.
And we were not the best paymasters. We compensated our employees by giving stock options.
But they never leave HDFC.
They never left us, but because they kept on getting stock options to everyone in the organization. So we had loyalty because they owned the company as much as the public did. And so we paid lower salaries and compensated by ESOPs. And therefore we had to compete with banks, otherwise we would be running out of business. Then our net interest margin would not be 2%. We had to show that. And because of better quality underwriting, our provisions were low. And that also helped.
So do you think that we need to approach the entire mortgage market, apart from what government can do and what Reserve Bank of India can do, also from the credit assessment and acquisition of customer in the digital era? I mean, the HDFC is an animal from a different era, and now if you start right now you want to start a mortgage company now on the line of HDFC, what will be the guiding principles?
No, you can save still some more cost if you go digital, but we still have, house is the largest purchase a family makes in his lifetime, his or her lifetime. They want to have a feel of who's lending them money. They want to know whether the price they are paying is right or is high. They want to know whether the builder is reliable or not. So they need to come and see someone face to face. It's a big thing in everyone's life to buy a house. It's not easy. And you scrape all your savings, you borrow from your family members, and then you come for a top-up loan on the balance you require. So they need contact with the person. The other thing is signature. We have to get them to sign. They have to go to the registrar's office to register the document. Wet signatures are not yet allowed, permitted. So, you can start digital. You don't need to call them 4 times into your office. You can call them once and get the work done. That way, it will be much more convenient now with with the credit bureau. When we grew and we were there was no credit bureau. Credit bureau is a 10-year phenomenon where you can get details of an individual, and it is so effective. Every borrower who comes to us for a loan, we first send it to the credit bureau. You know whether the history he has given in the form is right or wrong because the credit bureau gives you the information. How many checks have bounced? Is his credit good? All that you get from the CIBIL records. So it is safer now to lend to retail with all the checks and balances, with RERA, with the credit bureaus.
Do you see also a role of the so-called guarantee or insurance, like this evening who is organizing IMGC?
No, there is a scope for that, but it never took off in India. Like, securitization has never taken off in India. It's never ever taken off. If it has to take off, this is the right time because there's shortage of resources. There's dearth of deposits. The assets, banks' assets have grown by 20%. Deposits have grown by 13.5%. There's a shortage of liquidity in the system. And this is the time when housing finance companies may want to refinance and get some fresh money. This is the time when some banks who have surplus liquidity may want to take a package of portfolio and take it and give money to a smaller NBFC or a smaller housing finance. So it should be, I think it's an opportune time to get some kind of securitization started now. But guarantee, what is happening is that because the end rate a borrower pays is so competitive that he wants to see that if you get a guarantee, you have to pay the guarantee corporation. If my other bank does not do that, he can offer a loan which is few bips lower. Then people will go there, then you lose business.
This is a very, very price sensitive.
Very price sensitive. 0.1, 0.2% also, it's very sensitive. people shop around with 2-3 organizations before they go. So we have to be, if you want good credit and if you have to be competitive. Or your credit is weak. There are some NBFCs who are giving housing loans at 14% today.
Yes.
But then their non-performing loans may go to 5 or 10% also.
Absolutely. What would be the historically HDFC's in NPA?
No, our retail NPAs were very low. They were in point something. Yeah.
Few basis
points.
Few basis points and all. And what has been, Mr. Parekh, your experience about giving loans to the builders?
Our experience has been mixed. Most of the developers who are there today, we've been funding them for the last 40 years. And they've grown because of our support. And we needed them. Some developers over-leveraged themselves. Some developers were reluctant to sell land when they got into trouble. And they got into trouble. And so we've had a mixed in the last few years. We've had 2 or 3 cases which defaulted. And you know, the NPA definition also became more tighter and tighter. This 90 days is very difficult for a developer because it's a 5-year project. And you know, they have the unsold stock. If they sell the unsold stock, they can repay the loan. But that interest payment they cannot make in 90 days. You still have to make
Absolutely. This is following Reserve Bank of India following that, as you rightly said, the arbitrage opportunity between banks and NBFCs, particularly the large, systemically important NBFCs, they are treated almost on a par with banks when it comes to assessment of bad assets as well as the liquidity leverage. Mr. Parekh, you spoke about how the government should approach the affordable housing segment or the incentive. You spoke about how the RBI should approach the land financing. But tell us about the regulations. So there you think we need to take a relook because after this in the NBFC, particularly HFC segment that happened in the past few years, now NHB has been stripped off of most of its responsibility, right? It's become a sort of refinancing. And RBI has taken the load of it. So is this the right way to do it, or we should have actually a separate mortgage market regulator?
No, I'm not followed what has happened in the last few years. What has remained with NBFC and what has gone to RBI. So it's not proper for me to comment on
that supervision and inspection that
has gone to the RBI.
Yes, yes. And NHB is primarily now at this point of time is a sort of refinancing. You know?
No, but that should be okay.
Tell us.
But you know, we should talk now, in cities, we have to now talk about how to reduce pollution. Because worldwide, this is getting a lot of attention. And we have to also, our municipalities have to look at that. And you know, how to keep the sustainability momentum going. And bulk of the pollution in cities, at least 30-40% is due to transportation, mobility. So we have to, you know, there is a massive transformation going on around the world in mobility and in electric power supply also. So electric vehicles, and we have to get more into that in cities. You know, you see some of the European countries, 95% of the cars will be electric cars.
Yes.
And the amount of money they have invested in multimodal, affordable public transport system. So people don't have to use their cars. They have bike lanes. They have all kinds of things, incentivize people to go on bicycle or on two-wheelers, shared taxi services. How to reduce pollution in a city. We have a lot of work to do because, you know, every third person in Bombay is coughing and has got a cold now because of the pollution. And cities will have to now think, city administrators will have to think about this, which is a much bigger problem than trying to find a bank to fund your housing loan, I think.
Sir, nobody could feel the pulse of the real estate market than you. All of us, most of us from Mumbai, so just one question is, we have a vested interest. People are talking about that there is so much of redevelopment in Bombay, which adding to pollution, what you are talking about and all. But that's also, you'll see very soon that the supply is more than the demand. So the housing pricing cannot go up anymore. Is that the correct assessment? City like Bombay, where every roads is dig up for road development, and every second house has been, because it's already lived 25 or 30 or 50 years, the builders are going for fresh FSIs and new FSIs, and vertically they are going up. So supply will outstrip demand in the next 2-3 years. Is that the...
I don't see that. I thought demand will always be greater than supply. And there's a shortage of land. You are not making new land available. And either you have to go higher up.
That's what is happening.
To bring prices down. That can bring prices down. If you increase the FSI, that can certainly bring the prices down. And environmental lobby is so strong that you are not allowed to reclaim too much land to build housing. Like, Nariman Point was water when we were growing up. It was all reclaimed land, but now, due to this environmental issue, your government cannot reclaim large amounts of land to build housing. So one way is to go up, to reduce the prices of homes. Second way is to improve the traffic, the transportation, which we are trying to do. Government of Maharashtra and city, BMC and MMRDA is spending huge amount of money. Metro, new roads, coastal road, so that people can live far away and still commute to work. And work from home is taking importance. So 2-3 days people who can work from home are doing that. So these are some way, electric vehicles, solar power, these are some of the ways where cities will have to think how to reduce the greenhouse gas emissions.
Sir, we have 3 minutes left. I want to ask you, it's not part of the mortgage conference, if it's okay with you, about the merger of HDFC and HDFC Bank. But
it's done and dusted.
Before that, no, it's not. Before that, I just want to have a last word on this in this mortgage conference. I mean, what are the key lessons learned or the suggestions from you to the government, to the regulator, to the developers, to the buyers? Just tell us 2-3 things, and then I'll get into with your permission, to the last point.
No, when Reserve Bank of India came out with a rule or came out with a notification classifying NBFCs into 3 categories, large, medium and small, and said that bank-like regulations will apply for large NBFCs. The writing was on the wall for us, and the definition of large NBFCs of RBI was 50,000 crores and above. And that time we were 5 lakh crores. So it was a huge amount, and if bank-like regulations applied to large NBFCs, like if we had SLR and CRR and all, then we would be totally uncompetitive. And RBI helped us in the merger, in fact persuaded us that we should, and they were very receptive to the idea, and they were wanting it to happen because it was a large organization, there were always systemic risks in their mind, and so it was done with the full support of the Reserve Bank of India, I would say.
But certain things, I wanted to ask you at the end, but since you said that, but certain things the merged entity did not anticipate, like the margin coming under pressure and generating a lot of
deposits. The margin is coming under, no, there are 2-3 things. See, number of loans that HDFC have taken, they are maturing over time. So the bank has to repay those. And the system is short of liquidity. And the system is short of liquidity because Reserve Bank is concerned about inflation. Inflation is still above their comfort zone.
Yes.
Marginally above their comfort zone.
Yes.
Particularly, Reserve Bank is worried about food inflation. And food inflation is higher.
Yes.
And that impacts majority of the people in our country. So they have to contain that. And therefore, they are tightening the liquidity. It is a situation where if you spend more money than what you have in your pocket, what happens? So banks are scrambling for more deposits. There's enough demand for loans. So that's the reason you have to borrow at a higher rate for deposits, and therefore temporarily your NIMs shrink. You have to repay loans, old loans, and there's a dearth of liquidity in the market. You need money to give new loans, you need money to repay loans, and there is shortage of liquidity. So it has to, it sort of resembles in your cost of borrowing.
So
it's nothing, I don't think there's anything to worry about. It's a temporary phenomenon.
It's a very short-term challenge.
It's a temporary till liquidity is tight. See, today, as I mentioned, if your growth is 20% and your deposit base is growing 13.5%,
yes,
there's a gap.
Yes. Now, how do you bring back those guys who are leaving the bank fold and getting into equity market and all? That's what the perception.
Getting into?
Equity market directly or through mutual fund. You look at the demat accounts rising, etc., etc. So it will be a bit of a challenge for the banking segment.
It will be
right?
a challenge because mutual funds are getting a lot of money in the SIP.
Yes.
And insurance companies are getting. So raw material is cash, it's savings.
Yes.
Ultimately, what has to happen is the savings of the community has to increase. If the savings increase, then everyone will get funding. The savings increase must be there.
Yeah, so the challenges which HDFC is facing post-merger, it's a short-term challenge because of the systemic liquidity issue.
See, I have nothing to do with the bank, so
Correct.
I can't answer whether it's short-term, medium-term.
Okay.
It's wrong for me to answer even whatever I've said, I should not.
Fair enough.
I only said that HDFC loans have to be repaid by the bank.
Right.
And there is a shortage of liquidity.
That's it. That's fair enough. So I come back to the last one, sir. What is your one-line advice or suggestion for the home borrowers, for the builders or real estate developers, for the government and for the Reserve Bank of India? There are 4 constituents.
4?
For development and growth of the mortgage market.
I think India is in a very sweet spot at this moment, and we should not lose this moment. And we've never been at this stage when we are the fastest growing emerging market. And even this year, if you see the latest World Bank report, it says 3rd consecutive year the world is decelerating. And global growth, which was 6%, has come down to 2.4% global growth. But India still will have 7.3% GDP growth this year, whereas not by Indian government standard, but by the World Bank. And so we are in a sweet spot, and we should encourage more people to own their own homes. We should encourage developers to make more affordable housing. And because home is someone's, where you get peace and you get security, and it's long-term security for the family. And so home ownership encouragement is a good thing for governments to do.
Thank you. So this is Mr. Deepak Parekh, whatever you call it, the guru of and the maker of chief architect of Indian mortgage market and even beyond. So I don't want to summarize because he's very succinct and very precise what all needs to be done. He had said that why the bank should be allowed to buy land, to support buying land by the developers. At the same time, the developers should. Yeah. Okay. So, but at the same time, the developers should also bring in money on the table, and how the market is evolving, the opportunities and everything. So if you like, give him a big hand. Thank you.
Thank you so much, Mr. Parekh and Mr. Bandyopadhyay. At this point, can I request Mr. Mahesh Misra, MD and CEO of IMGC, to hand over a token of appreciation to both Mr. Parekh and Mr. Bandyopadhyay. Ladies and gentlemen, can we give a huge round of applause for this round of Fireside Chat with key takeaways of incentivizing developers to build smaller, cheaper homes to widen housing accessibility, RBI needing to allow banks to lend finance to developers to buy land to decrease overall housing cost, and prepayment of loans to be normalized in India to provide buyers with multiple negotiation points, and the need for investment in building sustainable, non-polluting modes of transportation to reduce high level of pollution. I think very discerning, very versatile, yet to the point conversation. Thank you so much, Mr. Parekh, for your time. Ladies and gentlemen, the concept of affordable housing actually transcends mere economics. It embodies the fundamental human right to be safe, secure, and have a dignified shelter. As urbanization accelerates and socio-economic disparities widen and magnifies, the pursuit of truly affordable housing remains a complex and pressing challenge. Today, as we confront the realities of soaring housing costs, stagnant wages, and systemic inequalities, the need to redefine affordability and reimagine housing solution has become more pronounced and relevant than ever. To actually further delineate and expand on the theme of how affordable is affordable housing, we would request the following set of distinguished panel members to make their way on stage. Before I invite my panel members, can I request all the audience to please get settled down as we are at the cusp of starting the finale of the panel discussion. So once again, can I request all the audience to kindly get settled down so that we can get started in a timely fashion. All right, the panel members who will be actually joining us for this conversation are as follows. Can we give a huge round of applause for Mr. T. Adhikari, MD and CEO, LIC Housing Finance. And after that, can I request Mr. Ravi Subramaniam, MD, CEO, Shriram Housing Finance to make his way on stage. Ladies and gentlemen, let's continue the round of applause. Mr. Shantanu Rege, MD and CEO, Mahindra Rural Housing Finance. Mr. Jairam Sridharan, MD, Piramal Capital and Housing Finance. Mr. Lakshmi Narayan Duraiswamy, MD, Sundaram Housing Home Finance. And to navigate the conversation and really steer the direction of this discourse, can I call on stage our moderator, Mr. Manojit Saha, banking editor at Business Standard, to moderate this panel discussion. Our esteemed panelists are themselves thought leaders, luminaries of their respective fields, and today, collectively, they are going to dissect the intricate layers of affordability in housing. And I'm sure their diversity in perspective is going to add a lot of depth and meaning to the overall discussion.
A very good afternoon, and in the last penultimate panel discussion of this Mortgage Finance Leadership Conclave. So the topic for this is affordable housing, one of the key component of mortgage finance. I mean, affordable housing as a concept is not very old, it's relatively new. Say last 10-15 years this has come up. And the overall mortgage market in India has a huge potential because if you see the mortgage to GDP ratio in India, it's only 11%, much lower than some of the developing countries and also the developed countries. Affordable housing got a big boost in the last, say, 10 years or so with the credit-linked subsidy scheme, which was announced by the government, I think, in 2015. The scheme ended last year, but it was known as a game changer. So to discuss some of these issues around affordable housing, we have a stellar panel today. Let me start with the theme of the discussion, which is how affordable is affordable housing? And is there a need to look at the definition to start with of affordable housing, which is like 45 lakh per unit. So if I can request Mr. Adhikari to start the conversation on his views on whether we should need a relook for the definition of affordable housing.
Yeah, good evening, everybody. Yeah, Manojit, I personally believe there is a need to have a relook. As you rightly said, there is a cap of 45 lakhs to define affordable housing, and I think also there's a carpet area cap, if I am not mistaken, 60 square meters in the urban conglomerates or the 7-8 big cities, Bangalore, Mumbai, Delhi and others, and 90 square meters in other areas. So the basic issue, I believe, I think we don't need to have two such things, because again this limit of the amount of 45 lakhs, I do not think it works in big urban conglomerates like Mumbai. Yeah, so okay, 60 square feet is the upper limit in Mumbai, but I don't know whether anybody could purchase a house, and as somebody was saying, people now after COVID are asking for bigger spaces. So what would you get for 45 lakhs of rupees in Mumbai? So I think if at all the government needs to have a relook at it, it should be defined to the size of the dwelling unit. So the rates could be higher in Mumbai, they could be lower in a city like Lucknow or Jaipur or elsewhere. I think that would make it more equitable and fair. And I think more the kind of people we want to come into this affordable housing, the EWS, the LIGs, the MIGs, which was defined in the CLSS, earlier CLSS scheme of the government, I think it would be fair to them. Otherwise, in a city like Mumbai, I don't think anybody could, the sort of intended class could get a house at 45 lakhs in a city like Mumbai.
Right, so
I
basically...
I believe it should be limited to the dwelling, size of the dwelling unit, immaterial of the cost.
Correct. So basically you are talking about different limits for different geographies, depending on their...
See, one size fits all kind of a scheme does not work.
Does not work.
Yeah, because of the different geographies in India, the land costs, the construction costs and other things in different areas are different. So I don't think a one shoe size fits all will work in affordable housing. I think we could make it more inclusive if we slightly made it more relaxed by removing that the cost component of the definition.
Right. Mr. Sridharan, what is your view on this?
Firstly, thank you for having us, and thank you to all the audience for staying back, even though Mr. Parekh is gone. I would have left, but I'm really glad that you decided to stay on and listen to us. All right, on this thing of definition of affordable housing. See, I'd make 2 or 3 points. One is the definition was created back in 2016, right? We are 7 years on now. House prices have gone up on average about 5% in this 7-year period, which essentially means overall house prices are up about 40% in this period. So that 45 lakh automatically becomes like 65 lakhs. Like, you do nothing. Just a simple inflationary move, means that 45 is today worth 65. So if 45 was the relevant number at that point, 65 should be the relevant number at this point. Like you don't need to overthink this, right? That's so I just feel like some of these numbers, which are absolute numbers that get cast in stone, don't adjust for the fact that India is an inflationary market. So numbers keep increasing over time. So that's the very at a very basic level. The second point I'd make is it's important for us to drive some simplicity in this. This is a very learned audience. People here are all related in one form or the other with the mortgage sector. But let me offer this. If I were to just stand up and ask everybody, okay, just define what is affordable housing according to the government of India. What percentage of people do you think will be able to actually define what the actual definition is? It is hard. It's complicated. There is some cap, there is a metro versus non-metro difference, there is some area thing on top of that. Area is defined in square meters. Whoever measures houses in square meters, like, I don't even know what my house measures in square meters. Like, we have all this complexity inherent in the definition of affordable housing. It's almost made it inaccessible to broad audiences. I think there is a need to simplify it, to make it to make it a more kind of viable and widely known definition. Mr. Adhikari is super learned man, and he's kind of runs one of the largest housing finance companies. He can rattle off what the definition is. I bet you 50% of the audience will not be able to rattle it off, including myself. So it's hard. There's no necessity for something as basic as a definition of a segment to be this complicated.
Correct. So simplifying the definition. Would you agree, Mr. Subramaniam, on this?
Absolutely. I think if it was 45 in 2016, clearly the same house was 45 lakhs in 2016 would be not even 65, would actually be closer to 1 crore at this point in time. So if the benchmark, to my mind, should not be a standard benchmark. It should actually be a benchmark which moves with certain parameters. You build in inflation, you build in some other things, and just let it automatically move up. It was 45 lakhs in 2016, it was 49 in 2017, 57 in 2018. Multiplied by inflation, the way you calculate capital gains tax, just calculate the increase in the benchmark, and then make that as the benchmark for affordable housing.
And there are more definitions. For example, the low income group, middle income group. I mean, what is the view? I mean,
but you know, if to add to the definition of affordable that he said, which half the people here would not be able to understand, half the people would think that the 10 to 15 lakh segment is affordable. Half the people would think that it's a subprime lending which is affordable. Anything which is given to a customer who is suboptimal or who's defaulter, etc., that is affordable. So that hundreds of definitions. I think the word affordable is actually a little bit of a misnomer at this point in time.
Mr. Rege, do you think, apart from looking at the definition of affordable housing, we also need to relook the way the low income group, middle income group, those are defined?
Yeah. So again, like Jairam said, thank you for having us. To add to the complexity that Jairam mentioned, I think as far as CLSS is concerned, they will call it LIG, EWS, LIG, MIG, which is more on income rather than even cost of the apartment or area, right? So that adds another layer of complexity. I think I agree with all the panelists that there is need to simplify it. As a housing financier, the opportunity is much more if the affordable ticket size goes up above 45 lakhs to 65 lakhs. But I'd also like all of us to reflect on how the government or the regulator looks at it, right? Out of the 30 lakh mortgage market in the country, only 10 lakh crore is above 75 lakhs ticket size, right? 10 lakh crore is below 25 lakhs. And about 10 lakh crore, so below 25 is 10 lakh crore, 25 to 50 is 10 lakh crore, and above 50 is 10 lakh crore, right? So if you are saying that above 50, right, which is only 33% of the market, there is still room to kind of call that affordable, then you would be leaving out a very small segment which would then not qualify for affordable housing, right? Increasingly, all of us know that the regulator, NHB, and all its interactions is very keen that the focus of housing finance companies should be on smaller ticket loans, right? Yes, we do a lot of 20 lakh, 30 lakh, 40 lakh loans, but nobody is doing as much below 25 lakh, right? And that's where there is a lot of pent-up demand for which they want to cater all their schemes and incentives so that you cater to that segment, right? So I'll just leave that thought on the table. But in terms of simplifying the definition of affordable, harmonizing it across, housing affairs, regulation, RBI, all for it.
Right. I mean, I think there is almost a uniform view about the definition of affordable housing, how it needs to change. So, Mr. Dorais, I would like to ask you, the CLSS scheme, as I mentioned in my opening remarks, was hugely successful. The government announced, not announced, but mentioned something about urban housing. Do you think another version of CLSS, the CLSS 2.0, that kind of thing is extremely required at this point in time to boost affordable housing?
Well, thank you for having me here. Yeah, I agree with you. CLSS scheme was a huge success, largely because of the incentives that they gave out rather than structurally how it was intended in the first place. As Jairam pointed out, CLSS was also another scheme which had a lot of complications built around it. A customer walks in and he says, I wanted to buy a house here. You can't tell whether that house or that project in that pin code qualifies for CLSS or not. The pin code in the previous street will qualify, in the next street will qualify, this may not qualify. So you got to scatter around and find out whether it fits into your database or not. But yeah, I hear that there is a scheme 2.0 coming in, but I think it needs to address fundamentally the the drivers for getting people back into affordable housing rather than giving a 2.5 lakh incentives and monetary incentives, because that will set a wrong behavior both from a financing side as well as from the customer side to buy affordable homes.
Right, right. Mr. Sridharan, would you like to add on that?
See, if you look at semi-urban India and the upper end of rural India, and you look at how housing ownership was 10 years ago and where it has gone now, it is clear that Pakka housing has increased significantly. At Piramal Finance, we do an annual off-site type thingy, and last week we went to Banaras to do our off-site. And one of our colleagues went to his village, which was a few hundred kilometers away from Banaras. He went there for an evening and came back. I asked him the next day, what do you see different? Is there anything different in your village compared to what it was like, when you were growing up? And he said, you know what, like the center of the village always had Pakka houses, but the periphery of the village, where we don't like talking about it, but let me put it out there, some of the lower castes live, it was always kacha housing, right? It was always mud houses all around. And he said, I went around this time and I was surprised to see that everything has become Pakka houses. And if you ask around in that population to say, how did Pakka housing come in this place, you will find that a significant proportion of those people have used some version of the benefit schemes that have come out, whether it is Pradhan Mantri Awas Yojana or some other form of like the CLSS schemes, etc. They have had a societal impact for sure. Now, whether it has been good for business or not, whether it is sustainable economically or not, I'm not getting into that argument right now. Whether it has had a positive societal impact, absolutely yes. There is no question about it. Anybody who has gone to villages and some of the smaller semi-urban areas in the last 10 years will vouch for it. The question is that societal good enough? And is that societal good sufficiently important for it to be a big enough priority for a country which is trying to reduce fiscal deficit? That's for the government to decide. But if you simply ask me, is it good for the citizens of the country? I would say yes, it is.
Right, right. Mr. Rekhe, the finance minister did announce specifically that the aim is to add 2 crore houses in the next 5 years. What is your view on this? What are the main challenges in doing so? And do you think the budgetary allocation for this is sufficient?
So, I think there has been a lot of talk about CLSS and PMAY-U, which is Pradhan Mantri Awas Yojana Urban. There is a scheme which is currently running called Pradhan Mantri Awas Yojana Gramin, right? Yes. Where basically the government, for all this Kacha to Pakka transformation, gives people or population something like 1.2 to 1.5 lakhs as stage-wise. They are almost playing the role of a housing financier, saying that if you are doing this transformation, I will give you 1.5 lakhs, right? So in that sense, the Gramin scheme probably more out of just, whether it's economically viable, whether private financiers can do it, whether it is our role, at what price would we do it, versus the government doing it as a societal good, is for the government to decide. But a lot of that has happened, and as housing financiers or mortgage professionals, we would only encourage it.
Right, right. In case the government comes up with an CLSS 2.0, what will be your suggestion to the government, Mr. Adhikari, your feedback in terms of the contours of the scheme? Can you tell us a few things?
Well, difficult advising the government on what to do. The government does what it has to do. Yes, on the CLSS urban, if I understand, if I've got my data right or the facts and figures right, some 76,000 crores of outlay has been announced in the budget, of which 54,000 is for PM Gramin. So what is left for the PM urban is probably 22,000 crores of rupees, which again, going by the need is less, but okay. I will not contest that, because that is for the government to decide what it wants to spend. The other thing is, of course, the cost at which this finance is going to come to us housing companies.
Right.
Right, because right now, yes, you must understand that there is a subsidy to the borrower, and there is a reduced cost to the lender, But of course, inherent risks are involved. As it is a risky industry. So we as an industry, we have to add on to the sort of risk costs to it. So of course, one of it is going to be what rates are we going to lend it on, how much of the lower finance costs are we going to be passing it on to the borrowers. So that would be one. Yes, the definitions, as Jairam says, 100% agree, too complicated. Well, Jairam, I'm not a learned person. I just read about your thing on the way back from the office to here. So yes, too complicated, right? You have these EWS, 3 lakhs, and then MIG1 and LIG, and then MIG1 and MIG2. And honestly, as Mr. Lakshminarayan said, PIN code A qualifies, PIN code B does not qualify. So I think we need to make it much more simpler so that it is more inclusive and more people need to come into it. Yes, I said yes, giving a subsidy, it's a good thing, but most of the people come into it because of the subsidy. The other part of it we need to think is the government basically, I believe, is targeting the so-called have-nots rather than the haves. Honestly, as housing finance industry, of course, we've lent out. We've given out for example, from 2015-16 till 22-23, we've disbursed 46,000 crores under the Pradhan Mantri Awas Yojana 1, if I may call it that. But how much of it has really gone to the have-nots is again debatable, is again questionable. So the government has to have clear focus. I think it needs to be simplified, very, very simple, and I think the attempt should be really to get the have-nots into the scheme rather than the haves.
Right. Mr. Subramaniam, what is your view if the government comes up with the CLSS 2.0, what could be your suggestions about the contours?
So if the government does come up with the CLS 2.0, I think there are two things they need to take care of. One is, while I'm with Jairam on the fact that it's had a societal impact, but also the scheme has been bastardized a lot, in the sense that there are a lot of people who should not be getting the benefit, who've got the benefit. They do not necessarily belong to the EWS and the LIG segment of society, but they belong to the upper classes, and they still have got the benefit because of some rogue housing finance company trying to work around the maths. They need to plug that gap, otherwise half the money going into the haves, as he says, doesn't make sense at all. Two, they need to make it simple to claim and simple to administer as compared to what it is now. The amounts of subsidy, etc., that the government is, as he says, you can't advise the government, but you need to make it simple and make sure that it goes to the right people. And if there are any housing finance companies or banks trying to bastardize the scheme, which many of them are at this point in time, you need to come down hard upon them. I think that's something which the government must seriously implement.
Correct. The other issue is that since we are talking about affordable housing, let me ask very, very bluntly, is affordable housing a viable business proposition? Mr. Duraisamy, what is your view? Do you make enough margins from affordable housing?
You're asking barbers whether we all need haircuts. just to be clear what you're doing here.
Do I want a job or not? Is that what you're asking, right? So I get that. Absolutely. Affordable housing is a viable business, if you do this right. Nearly 70% of India lives outside of the urban cities. And, any houses that you build there within a reasonable construct and, with the definitional, change that, we can bring about, should certainly qualify for affordable housing. But the challenge is not actually in affordable housing. The challenge is in the supply side of the affordable housing as to how many affordable housing units are actually coming up that you can finance, and what are the supply side issues that we need to address. What motivates a builder to build an affordable housing complex today versus building a lot of these not so affordable housing complex? It's a fundamental question that we need to address, because it is not that there are not HFCs or banks not willing to finance affordable housing today. It is just that the opportunities are limited in the bigger cities, in the outskirts of bigger cities, with these definitions, there are very limited, 20 lakh, 25 lakh houses that you will find, or even 35 lakh houses that you will find outskirts of even tier 2 cities, leave alone Mumbai, Delhi, and, Bangalore, etc. So that's the challenge that we are grappling with.
Right. Mr. Rege?
So I actually represent a company which has done 12 lakh home loans, bulk of them 1 to 1.5 lakh ticket size, right? So we've done very, very small ticket home loans. There is a lot of demand. The question that you asked, is it affordable? Now, the deeper you go in terms of your penetration to cater to this segment, right? As you go to, there are, I think, 800 districts in this country, right? Most housing finance companies will not have more than 300 branches. So we don't even cover most districts. Forget about talukas and going deeper. Because as you go deeper, yes, there are no builders, but there are customers who are willing to construct their house, right?
Yeah.
They have a plot of land,
Right.
they might construct very affluent houses, maybe even take loans of 50 lakhs. But distribution, getting to that customer is expensive, right? You either need your own feet on street, and the entire ecosystem of DSAs, connectors, etc. does not exist. So you have seen several housing finance companies that classify them into two kind of models, right? To be successful in affordable housing, you either need economies of scale, so you have to be very large, like the likes of LIC or Piramal, or you need economies of scope, which is you identify a customer segment and really go after them. I'd call, let's say, Mahindra or Aptus or others who are really more deeper. They charge a much higher interest rate, but have specialized in that category. And you can make very good money in that segment as well.
Right. But tell us something, Mr. Subramaniam. Reach, I mean, we are talking about housing for all. Many companies operate in certain geographies. So do you think we really need to scale up our effort to ensure housing for all? I mean, how many finances reach in the tier 3, tier 4 centers?
So it's a bit of a related question to the question on whether affordable housing finance is profitable and scalable. I think just adding to his, I'm just addressing the previous question first before I get to this question. I think from an affordable housing perspective, every single affordable housing finance company in this country today is profitable. Scale, no scale, doesn't matter. A 3,000 crore AUM company is profitable, a 50,000 crore AUM housing finance company is profitable. Affordable housing finance companies lend at 14% to customers, borrow at 9% from the market, or 9.5%, depending on who they are. Almost all of them have GNPAs in the region of 1.2%, credit cost in the region of 0.3%, 0.4%. Irrespective of the 19 in the cost that you spend, how can you not make money in the affordable housing finance space? I can't understand. Okay. So affordable housing finance, make no mistake, is the most profitable part of the housing finance business. You need to stay invested in it for at least 10 to 15 years to make it scalable, to make sure that you reap the benefits of what you have sown, and only then will something come out of it. Okay. Today, the problem with affordable housing finance company is scalability. That brings me to the tier 2, tier 3 cities.
I will just interrupt you for a minute. That was my question actually. Does it remain affordable if the interest rate is 14%, 15%?
Correct. So that's a question you will actually have to ask most of the housing finance company MDs who are sitting here, that why are they lending at 14% and 15% to customers who cannot afford 14% and 15%. But having said that, the ticket size is low. It's about 10 lakh, 11 lakhs. 1 or 2% here and there doesn't really move the needle on the EMI. But what moves the needle on the EMI is, instead of an 8 lakh loan, if you give him a 9.5 lakh loan, he's very happy because he can't put that 1.5 lakh together. He's willing to pay you that 1% extra. But having said that, I think there are some companies which do charge usurious rates of interest. I'm not naming those companies, but pretty much most of the affordable housing finance industry, which is in the 12 to 13.5%, I think they're doing quite okay.
Right.
As far as affordability is concerned.
Right. On the penetration issue, Mr. Sridharan, I mean, how do we ensure housing for all if we don't penetrate enough? in those tier 3, tier 4 cities?
See, honestly, it's very hard. I'll tell you, it is not an easy problem to solve at all. Think about it this way. Mr. Adhikari's company has a couple of lakh crores of housing book, right? People who are purely focused on the affordable end of the market, where most of our loans are less than 20 lakhs or 25 lakhs or so, let's say the rest of us, can we continue in this current business model that we have, that we will only do small ticket kind of loans of 11 to 13% and continue to scale it? And can we ever get to 2 lakh crore ticket size or 2 lakh crore AUM size like Mr. Adhikari? I would say the answer is no, we cannot get there. It's not possible. The regulatory environment today and the the way the costs and profitability stack up, it is not conducive for us to do, for us to become that big. I think who made the point? I think Lakshmi made the point about the regulator, or maybe you made the point about you made the point about regulator wanting, the NHB wanting to actually keep affordable housing players small, right? Essentially, the idea has become, hey, create small niche entities which will be profitable. I 100% with Ravi. All affordable housing companies are profitable. There is no unprofitable one. But keep them small, essentially have a regulatory environment which has rules which are set up in such a way that it is impossible for you to actually scale it beyond a point, right? If you see what has happened in the last 1 year, a lot of, Mr. Parekh was here, the largest housing company in the country. He stopped remaining a housing finance company, right? They moved away from being a housing finance company. Another very large housing finance company is in the process of actually shifting out. They're not on the panel, so let me not name them. But very large housing finance company, 50,000 crores of balance sheet. They're moving away from being a housing finance company. Housing finance company, the concept of a large housing finance company is not going to exist in the future. Mr. Adhikari accepted. Right? That is the reality of where things are headed. So from a scale standpoint, we are not set up for that. We are not set up for pure affordable housing players getting to that kind of scale. For you to continue to deliver at that, for you to continue to scale that penetration into that market, either you're going to have 1,000 more housing finance companies, right? Or you're not going to have penetration at all. Unfortunately, that's the dire prediction I have.
There's also a bit of a structural issue in the way the housing finance companies are set up. If you look at most of the affordable housing finance companies, they're all PE-owned housing finance companies. Now, private equity-owned housing finance companies typically will have a 5 to 6 year horizon. You don't build businesses in 5 to 6 years. Don't build business to scale. So, the moment you start off scaling up, costs hit you. When costs hit you, your profit takes a beating. When profit takes a beating, your parent will not be happy because valuations take a beating. So typically, affordable housing finance companies, the smaller ones, or even the mid-sized ones, struggle to find the balance between scaling up and profitability. That is where the problem starts for most of the affordable housing finance companies. So while I am with Jairam on most of the things, I still believe that affordable housing finance can be scaled up to a large scale. Because if you look at even companies like LIC, Housing Finance Company, a lot of the business does come from under 25 lakh customers. But there, you need time. You need time. You need the willingness to invest. For example, Shriram Finance Limited is a 200,000 crore company. Now, that was not built in 1 year. It's a 50-year-old company. LIC Housing Finance is not a 5-year-old company. So similarly, you stay focused on that segment. Don't worry about the investments and profitability for some time and go about building your distribution. Only then can you scale up, and only then can your vision of housing for all be achieved. Till that time, affordable housing finance companies, I'm not saying all of them, most of them will remain small. How many affordable housing companies, finance companies are greater than even 10,000 crore today? I can name them on fingertips. Aadhar, Awas and us, Shriram Housing. Beyond that, there's no housing finance companies in the solely in the affordable housing space, which is larger than 10,000 crores. Isn't that a telling story?
That is the dichotomy which is happening. The market is crowded. In the last few years, so many companies have come.
But the market is huge. You have 30,000, you have 30 crore households in this country. 35 lakh homes were bought.
Right.
So that's 1%. 99% is still a huge market for you to go after. But do we have the capacity, the investment capacity, and the tolerance to lower profit, which is required for us to go to tier 2, tier 3? And lastly, where do you find talent in tier 2, tier 3 to actually scale up? Nobody talks about this. But the fact is, the moment you go to tier 2, tier 3, there are 5 guys available, 5 companies chasing those 5 guys. How will you do business?
Right.
LIC has a huge network of agents they can actually leverage on. Nobody has that network.
So, Mr. Adhikari, what will your prescription, housing for all, how do we achieve that?
Well, for one, as Ravi and others have said, yes, we need to reach out. If I talk of my company, I'd be candid in admitting we have ignored the affordable housing. We are very comfortable lending to the blue-collared and the white-collared, the salaried, a person with income tax returns, somebody low risk. That's what we've done, right? Whereas, honestly, if you ask me, from what I hear Ravi and Shantanu and Lakshmi and even Jairam saying, it's a dream for me. Lending at 12%, 13% is a dream for me. My blended lending cost is 9.75. Boy, I wish I was in their shoes, bhai. They are operating at net interest margins of 5% plus.
We wish we were in your shoes.
They are operating at net interest margins of 5% plus. I'm struggling to maintain a net interest margin of 3%.
We can discuss co-lending opportunities after this.
So, since
yes, I am a AAA rated company, but my blended cost of borrowing is 7.7%. And I have to fight with the SBIs and the ICICIs and the PNBs who are lending, whose cost of borrowing is 5%.
Yeah,
blended,
of course.
blended.
There are certain regulatory initiatives.
So really, if you really want to get into the affordable class, I think the government has to give us some comfort. See, the NPA rules or regulations, right? 90 days is an NPA.
Right.
Whether it is an urban lending, whether it is a white-collar lending, whether it is a risky affordable lending. Why can't I have a different set of rules for lending to the affordable segment? Number 2, builders. Abhinandan Lodha was here. Why would he invest in a affordable housing project? What is there in it for him?
Right.
He'd rather invest in a luxury or a semi-luxury. Last 3-4 years, there is a huge uptake in the inventory in the semi-luxury and luxury market. Affordable market, none of my top 15-20 builders, they are leaving out the affordable market. If at all they are there, I think the Adanis have got it because of the SRA or SR, the slum rehabilitation schemes given by the government where they're getting additional FSIs. Otherwise, the builders are not interested. There is a demand. 3 basic needs in India, as we say, roti, kapda and makan. And somebody said, we build a house not for 1 generation, I think 3 generations, 4 generations. So everybody wants a house. Where is the supply?
Right.
Where is the supply?
Since we are completely run out of time, I will request very short closing remarks from the panelist. Mr. Adhikari has already said, housing for all, how we are going to achieve it? Mr.
Well, for one, I'm going to get into affordable housing. So you 4 guys, you be careful. You be careful.
Okay, it's great to be in a jungle where there is no lion. So thanks for leaving something. I think supply side of the physical product, encouraging that, creating a regulatory environment that allows housing finance companies to scale, and creating a liabilities structure, a borrowing structure, which is supported by the government or government agencies in some way, which allows affordable housing finance companies to be able to provide truly affordable products to their customer base on the back of some of that refinance. Those would be some of my prescriptions.
Yes, yes, sir.
I'm slightly myopic in my vision. I'm more focused on Shriram Housing Finance and on what I need to do in the next 5 years in this company to take it to the next level.
Spoken like a true PE funded company.
My wish list from the government is one, a good CLSS scheme which covers a little bit of my credit cost and not particularly the interest subsidies alone. Two, a cheaper funding source and easier funding source for apart from NHB for housing finance companies. And lastly, you have a very interesting apprenticeship program which runs through the CSR programs for most of the companies. Launch something specific for housing finance, particularly in the rural areas, so that adds to it. And lastly, also give us infrastructure status. Give us something which we are able to go out and raise money easily from development finance institutions, raise money overseas, which attracts easy foreign capital into this country, and don't make it difficult for all that. If you do that, we will have the money, we will have the wherewithal, we will have the distribution and the capability to go out and fulfill all the affordable homes for all dream of the government.
Right. Mr. Rege, your closing remarks.
Yeah, so I think housing for all will happen. I would say it requires just better partnership between government and the financial services companies. A couple of enablers. One is, like we discussed, simplification and harmonization of the definition of affordable, and then making liquidity and cheaper capital available. And third, what you said, also understand that customers who are affordable and smaller ticket home loans, their cash flows are not the same as urban bank salaried people, right? So some dispensation, maybe even towards provisioning and NPA norms.
Correct. Mr. Duraisamy, the last word.
Yeah, just a couple of things. So I don't disagree with any of the suggestions that I've given, but whatever that the government chooses to implement on affordable housing, my wish is that they keep it simple, that it's easy to implement rather than just reading interpretations, that we will all have different views of what that regulation means, etc. And secondly, this arbitrage between affordable housing and what we call as prime housing isn't going to exist forever. So we need to find a way to create as Jairam also mentioned, a liability profile that helps us meet this criteria. Otherwise, as the spreads keep coming down, we'll need to find alternate ways of making money as affordable housing companies. So that's my 2 cents on this.
I think you want to add something, yeah.
Yeah, I have one last point, and that is that which Mr. Deepak Parekh also alluded to, which is that affordable housing finance companies go out, take the risk, lend to a customer who banks or even LIC Housing Finance won't lend to, but they stay with us for 6 months, 8 months, 9 months, 10 months, and then they get taken over by somebody because they are credit tested. There must be some protection for affordable housing finance companies against those takeovers. And as Mr. Parekh alluded to, whether it's 1 year, 2 year, 3 year protection, allow us to recover our money before we hand them over to somebody else. We take the risk, we credit test them for you, you reap the benefits, life is not fair. So somewhere I think...
I think this proposal is going to get like 5 votes out of 5.
Yeah. So I mean, our time is up for some time back. So it was a fascinating discussion. I mean, of course, the issues surrounding regulation and other dispensation, that's a discussion for another day. But clearly, there are certain challenges, to fulfill the vision of housing for all, as it is coming out from the discussion. And thank you so much, all the panelists for your views. Please, a big round of applause.
Thank you, panel members and the moderator, for this discerning conversation. At this point, can I request Mr. Raj Singh, IMGC board member, to hand over a token of our appreciation to the panel members and our moderator. Ladies and gentlemen, quick takeaways from this part of the conversation is that bank needs to penetrate into tier 2 and 3 cities, since a lot of demand for housing finance is coming from these areas. banks having to prioritize small ticket loans to make housing finance accessible and affordable for wider range of population, and affordable finance companies needing to find that fine balance between creating sustainable housing ecosystem and scaling up their operation to become big ticket players. Thank you so much to all the panel members and our moderator for this very engaging and exhilaratingly stimulating conversation. Ladies and gentlemen, as aptly stated by Albert Einstein, the ability to change and improve is a true sign of intelligence. Today, we explored the contours of future of housing finance, delving into the various nitty-gritties and complexities of our world with courage, curiosity, and a lot of compassion. Each conversation, every dialogue, every insight has been the testament to the power of immense collaboration, empathy, and resilience in navigating the challenges that lie ahead. As we draw the curtains on this remarkable event filled with thought-provoking speeches, engaging fireside chats, and enlightening panel discussions, I'm really filled with a lot of gratitude by the might of collective intelligence that we witness on stage and a lot of inspiration. The wisdom shared by our esteemed speakers has ignited a new perspective, stirred deep reflections, and illuminated pathways towards progress and innovation. A big thank you to all the speakers, our panel members, and our engaged audience for making this event such a tremendous success. And on this note, I'm Ridhima Wali signing off. Please join us for cocktails, which will be followed up with dinner. And have a great evening, everyone. This is Ridhima Wali signing off. Thank you very much.